Sir, very happy afternoon to all. So we are doing ratio analysis, the second chapter. In that we are going to solve question number 1 of the book back. The total sales, all credit of a firm are 6,40,000, right sir? So total sales is equal to 6,40,000. I am continuing the question. It has a gross profit margin of how much percentage? 15%. So as we all know that sales should be classified into two categories. Number 1, cost of goods sold and gross profit. Gross profit at the rate of, so automatically cost of goods sold at the rate of, so 6,40,000 into 15% comes to 96,000 is a gross profit, right sir? So I can calculate the cost of goods sold, my dear lovable students, which is 6,40,000 minus 96,000 or 6,40,000 into 85%. Both will give you the same answer, right sir? So 6,40,000 minus 96,000 comes to 5,44,000 is the cost of goods sold. Is the cost of, fine, I am continuing. And current ratio of 2.5. My dear lovable students, current ratio is equal to current asset divided by, which is equal to 2.5 divided by 1. That means if 1 rupees is the current liability, 2.5 rupees is the current asset. Comfortable? Yes sir. And they are saying that the firm's current liability are 96,000. So current liability is equal to 90, which is equal to 1. Which is equal to 1, right sir? So if this is 1, we can convert that into 2.5, right sir? So current asset is equal to current liability divided by 1 into 2.5. Am I right sir? That means 96,000 divided by 1 into 2.5. So 96,000 divided by 1 into 2.5 comes to 2,40,000 rupees is the current asset. Comfortable? And they are saying that inventories are 48,000 and cash is how much? 16,000. These are the information. So current asset can be classified into, sir, inventory, prepaid expenses. If you want, you can calculate a quick asset, right sir? I don't know whether it is required or not, but we can if we want. That's it. So current asset can be classified into two categories, inventory and prepaid expenses. And you will get here quick asset, right sir? What is the inventory given in the question? 48,000. We know that total current asset is equal to 2 lakh, and so quick asset should be 2,40,000 minus 48,000 comes to 1,92,000 is a quick asset. Am I right sir? Sir, I don't know whether this is required or not. I am always analyze the question, giving you various analysis. My intention is not to give the answer. Intentionally or unintentionally, I will be doing wrong answer. Hello, sir. That will be a lesson for you. Okay, fine, sir. This way, when I go, you are going wrong. Right. Determine the average inventory to be carried by the firm. If a firm's inventory turnover ratio of how much time is expected? That means, as a company's owner, CEO, CFO, you want the inventory turnover ratio to be 5 times. We are going to set the data, right sir? As we all know that inventory turnover ratio is equal to cost of goods sold divided by average stock. Finished goods, average stock of finished goods, right sir? Do you are having inventory turnover ratio? Yes sir. How much time? 5 times given in the question. So 5 is equal to, do you know cost of goods sold? What is the cost of goods sold? 5,44,000. So 5,44,000 divided by what stock? So my dear lovable students, can I cross multiply? 5 average stock is equal to 5,44,000. That means average stock is equal to 5,44,000 divided by 5 comes to 1,08,800 should be the average stock. Should be the. So my dear lovable students, determine the what inventory? Average inventory to be carried by the firm. So you are recommending to the firm that please carry 1,08,800 of inventory. If you are carrying 1,08,800 rupees of inventory, your inventory turnover ratio will be exactly how much time? 5 times. And as we all know that average stock is equal to opening stock plus closing stock divided by 2. Correct? This should be equal to 1,08,000 and so my dear lovable students, opening stock plus closing stock should be 1,08,800 into 2. Are you really with me? So opening stock plus closing stock should be, sir, 2,17,000. So if you add both what stock and what stock, opening stock and this much should be the value. Sir, opening stock and closing stock. You tell me, my dear lovable students. In question, they have given one stock. Right? Is that opening stock or closing stock? Is that the firm's current liability are 96,000, inventory is 48,000 and cash is what? 16,000. Sir, I can't say, sir, whether it is opening stock or what? Closing stock. If the given details on the start of the year, I can take that as opening stock. If the given information is on the end of the year, I can take it as what stock, man? Closing stock. Correct, sir? Sir, the total sales of a firm are 6,40,000 rupees. They have not said that the total sales budgeted of the firm is 6,40,000 rupees. They have not said. So, when you read the language of the question, we can understand it as a closing stock. It has a, because the total sales of the firm means achieved sales generally. Correct? It has a GP margin of 15%, means they have achieved a GP of 15. They don't have a budgeted GP of 15%. Are you able to appreciate? So from the language of the question, I can assume that it has a what stock, man? Closing stock. So out of 2,17,600, if the inventory closing stock is how much? My ideal opening stock should be 2,17,600 minus 48,000. Whatever answer I am getting should be the ideal opening stock. Right, sir? Sir, that and all not at all asked in the question. Fine. My duty is to analyze the question. That's it. Are you really with me? I will be giving you various angles. I have to make you think. That's it. So what is the requirement? Determine the what inventory? Average inventory to be carried by the firm. If an inventory turnover ratio 5 times is expected, that's what they have done. Inventory turnover ratio is equal to cost of goods sold divided by average stock. Since the GP is how much percentage? 15%. Cost of goods sold should be 85%. Sir, cost of goods sold is equal to sales into 85% come to 5,44,000. Have we got? Stock turnover ratio, as you already know, that is equal to cost of goods sold divided by average stock. So 5 is equal to 5,44,000 divided by average stock. So average stock is equal to 5,44,000 divided by 5 comes to 1,08,000. That's it. Dot. Have you all got the answer? Coming to the second part of the question. Determine the average collection period. Determine the. They are saying that assume 360 days in a year. 360 days in a year. Right, sir. If the opening balance of debtors is intended to be how much? 80,000. So my dear lovable students, sir, average collection period is related to debtors. I can calculate the average collection period in 2 ways. Right, sir? Either direct method or indirect method, or rather direct formula or indirect formula, whatever it may be. Yesterday in the last class we have talked about. Right, sir? So average collection period classified into how many categories? 2 categories. One is direct formula and the indirect formula. Comfortable, sir? My dear lovable students, sir, first I am doing indirect formula. In order to find out indirect formula, what data I should need? Debtors turnover ratio. So debtors turnover ratio is equal to credit sales divided by average accounts receivable. Comfortable? Are you really with me? Is the debtors turnover ratio given in the question? No. We have to find out how much is the debtors turnover ratio. Is the credit sales given in the question? Yes. Yes. That means, my dear lovable students, whatever sales given are fully credit sales. Comfortable? Is the average accounts receivable given or opening accounts receivable given? Opening accounts receivable given. They have not given the average accounts receivable. Right? Okay, fine. But I know the total current asset. Right, sir? I know the total current asset. Sir, from that total current asset, have they given inventory? Yes, sir. Have they given cash? If I remove from the total what asset? Current asset. Total current asset. If I remove what and what? Inventory and cash, will I get closing debtors? Can I assure that that figure is only closing debtors, or will it have other current asset also? Since the other current asset like inventory and cash has been separately given in the question, can I take, I don't know man, it may be, may not be. I'm always saying I will always give only the thinking part. If you want answer, below it is there. If you want answer, go to ICI. It is there, printed answer. It's not my duty. My job is not like that. I know when I am saying all this, you are start thinking. Are you really with me? That thinking, that thought only I need from you. So my dear lovable students, let it be very positive. Life is positive. I am assuming that the balance is the what? Closing debtors. Fine. What is the total current asset? 2,40,000. From that, I am reducing inventory given 48,000, cash given 16,000. Comfortable? So, my dear lovable students, 2,40,000 minus 48,000 minus 16,000 comes to 1,76,000. We are assuming as closing debtors. Comfortable? So, average accounts receivable is equal to opening receivable plus closing receivable divided by 2. Is the opening given? Yes, sir. How much? 80. 80,000 plus 1,76,000 divided by 2. So 80,000 plus 1,76,000, not 2,56,000 divided by 2 comes to 1,28,000 is the average accounts receivable. So debtors turnover ratio is equal to the entire sales or credit sales. What is the entire sale? So 6,40,000 divided by 1,28,000. Am I right with my calculation? So 6,40,000 divided by 1,28,000 comes to 5 times is the debtors turnover ratio. Debtors turnover? Sir, debtors collection period is equal to 360. Don't say 365 because in bracket they said that you have to assume it as 360 divided by how much time? 5 times. So 360 divided by 5 come to 72 days is the debtors what period? Have you done the question? Have you traveled through direct route or this route? Indirect route. Have you also traveled the same route? Yes, sir. Maybe, may not be. Sir, I am getting, sir, in the indirect formula as 72 days. Correct? My dear lovable students, I am going to solve under direct formula. I am going to solve under direct formula. Direct formula, sir, debtors what period? Collection period is equal to total debtors receivable divided by average credit sales per day. Average credit sales per day. Correct? Average credit sales per day. For that, if you see, ICA is having this formula. You just check that whether you are able to appreciate this formula. Average collection period is equal to average accounts receivable divided by credit sales into 360. Are you able to accept it? Which is nothing but credit sales per day. Are you really with me? You can do either credit sales divided by what 60? 360. If you do credit sales divided by 360, you will be getting credit sales per day. Basically, sir, average collection period under direct formula is equal to average accounts receivable divided by credit sales per day. How you will calculate credit sales per day? Total sales divided by 360. That's what they have done as average accounts receivable divided by credit sales into 360. Both stand same. Right, sir? Sir, look at here. What is the average accounts receivable? 1,28,000. So, we are to follow the same route. Right, sir? So, 1,28,000 divided by what is the sales given in the question? 6,40,000 divided by what? 60? 360. comes to how much? 6,40,000 divided by 360 means 1,777.77777. Right, sir? So I am having outstanding of 1,28,000. Every day I am making credit sales of 1,777.77. Comfortable? So 1,28,000 divided by 1,777 point till the 7 end in the calculator. 777777777. Hello, sir. You will be getting exactly how many days? 72 days as the data's collection period. Comfortable? Are you really with me? Sir, the same or as per ICA, what is the average accounts receivable? 1,28,000. Nothing, sir. No rocket science I am going to do. Same thing only. Divided by, what is the credit sale? 6,40,000 into 360 days. Comfortable? So 1,28,000 divided by 6,40,000 comes to 0.2. 0.2. Right, sir? Into 360 means 72 days is the what period, man? Collection. Data's what period. That means or that shows that, wait, what is the credit sale? 6,40,000. This is for 360 days you made. This is for, so this is the 360 days credit sale. 360 days. Any time during 360 days, if you see 1,28,000 is receivable. Today also 1,28,000. After 1 month also 1,28,000. Sir, yesterday also 1,28,000. Sir, how the same 1,28,000 will be receivable, sir? Because every day credit sales is happening. Every day collection is coming from the data. Both are one and the same. So one amount will be added to that figure and one amount will be reduced from that figure. So 10 rupees adding 10 rupees minus, 10 rupees adding 10 rupees minus, 10 rupees adding 10 rupees minus. If you add and less the same amount, will there be any change in the amount? No, sir. Comfortable? That means out of 6,40,000, 20% are receivable. 20% are you really with me? I made a total credit sale of 6,40,000. That means in a year I have to get 6,40,000, but 1,28,000 are receivable. So 1,28,000 divided by 6,40,000 means, sir, if this is 100, 20 rupees are receivable for me. Yes, sir. So what is the 20% of the 360 days? 72 days. That means 72 days receivable. Are you really with me? That's what ICA is saying, that what by what into what? Average accounts receivable divided by credit sales into 360 days. If you don't want in days, you put into 12 months. Are you really with me? If you don't want in months, you put into 52 weeks. Clarity. So however you want to adjust, you can adjust. So technically, the data's collection period will be how many days, man? 72 days. Clarity. So average receivables will be opening receivable plus closing receivable divided by 2. Closing balance of receivable is found as follows. Current asset 2,40,000. Have we got? Less inventory 48,000 and cash 16,000. Total 64,000. So the receivable will be the balancing figure 1,76,000. Here we don't have a gap to assume that this consists of other current asset, because if there is any other current asset has been expressly spelled out in the question. Comfortable? So the balancing figure should consist only of closing receivable. Closing. So average receivable is equal to opening receivable plus closing receivable divided by 2 comes to 1 lakh. So average collection period is equal to 1,28,000 is the net receivable on every day of the year. Sir, for the entire year you made a credit sales of 6,40,000, right, sir? Up 20 rupees is receivable out of 100 rupees means 20% is receivable. Comfortable? That means on 360 days into 20% come to 72 days is the average collection period. Sir, I understood both the question in all the angles possible from your heart. Anybody is there? Where is a grand clap? Before you check question number 2, my dear lovable students, I want you to try question number 2. Go wrong or go correct. I will tell you, man, with regard to a subject like costing and FM, there is no concept of getting the right answer. First of all, understand that. If you are thinking that if I get 72 days only my answer is right, that is right for MCQ, but for descriptive, I don't have such a thought. Because what you are thinking matters rather than getting the what? Answer. rather than getting the answer. Because if you start run behind the answer, for a certain question you will get the answer, but majority of the question, practically, in fact, in examination, we will not get the answer. But those students only will pass in exam, because ICI will not check their final answers. ICI will check in what route you are thinking. It is very much evident from the step-by-step mark what they are giving. If you see any paper, so don't worry about the answer. Think it on different ways. Are you able to appreciate? So before you try question number 2, try the question by yourself and come back to me to check whether your answer is correct or not. Yes, sir. Sir, very, very, very happy afternoon to all. So we are doing the book back of the ratio analysis, my dear lovable students. I'm moving into question number 2. Capital structure of Beta Limited as follows. That means they have given the liability side of the balance sheet. Equity share capital of 10 each, 8 lakh. How much lakh? That means 8 lakh divided by 10 come to 80,000 equity shares. Sir, I don't know whether this information is required or not. But when I read a question, I used to analyze like this. Hello, sir. 3 lakh is the total preference share capital. 9% preference shares of 10 each. So, 3 lakh into 9% comes to is the preference dividend I have to pay. And I don't need number of preference shares. If you want, you can calculate that also when you read the question. Additional information. Profit after tax of how much percent? 35% come to 2,70,000. So basically they have given the PAT. Profit after tax. How much? 2,70,000. This will be 65%. Because they said that less tax at the rate of 35%. So profit before tax. Can we find out? So 2,70,000 divided by 65%. 2,70,000 divided by 65 comes to 4,15,384.6153, whatever it may be. Into 35% tax minus is equal to, I am getting 2,70,000. Comfortable? Fantastic to the core. What is the next information given? Depreciation of 60,000 rupees is there. Depreciation is a non-cash item which will form part of the fixed cost. Correct? Equity dividend paid 20%. Equity dividend paid 20%. Market price of equity share in market for one share, it is 40 rupees. Right, sir? You are required to compute the following. Show the necessary working. Dividend yield on equity share. We can calculate. Cover for the preference, that is preference dividend coverage ratio and equity dividend coverage ratio. We have not typically studied the equity dividend coverage ratio, but you can easily find out. Are you with me? Earnings per share, EPS divided by, sir, MPS divided by EPS will give you the earnings per share. Residual earnings divided by number of equity shares will give the EPS per share. And price earning ratio, MPS divided by EPS will give the price earning ratio. Right, sir? Straight away, everything is available in the question. So, from the PAT, profit after tax, with so much of happiness, I will give the preference dividend. Correct, sir? At the rate of 9% comes to 27,000. 2,70,000 into 27,000 comes to 2,43,000 is the residual earnings. Right, sir? So, out of the PAT, what I am having, I have given 10% preference dividend. Fantastic to the core. Now, I am coming, sir, with the residual earnings. What is the problem? Any problem? No problem. Any mistake I said? No, sir. Right. Fantastic. So, divided by number of equity shares. Number of equity shares. Already we find out the number of equity shares are 80,000 shares are there. Comfortable? So, I will not put bracket and all because it's divided by number of equity shares. So, my EPS is equal to 2,43,000 divided by 80,000 comes to 3.0375 is the earnings per share. Comfortable? What they want? Sir, dividend yield on equity share. Sir, dividend yield means return. Yield means return. Always return has to be expressed in percentage. Correct? Which is nothing but DPS divided by MPS into 100. Comfortable, sir? My dear lovable students, DPS, dividend per share. I know what is the earnings, right? They are talking about the equity dividend paid, how much percent? Certain students will take a wrong assumption that on residuary earnings they will pay the equity dividend. No. No. On the what value? Face value of the equity share, nominal capital, paid up capital, we will get the equity dividend. Right, sir? So, equity dividend is equal to 8 lakhs into 20 percentage comes to 1,60,000 is the total equity dividend. Right? So, this 1,60,000 dividend has been shared by 80,000 equity shares. Comes to 2 per share. Are you really with me? Why, sir? Ask me. Why, sir? Tell me. Why, sir? Why, sir? Sir, face value is 10 into 20% itself is 2. Are you understanding, huh? Sir, why are you going for 8 lakh into 20 percentage? Hello, sir. You will be getting 1,60,000 divided by number of shares. Then you are getting how much per share? 2 rupees per share. What is the face value expressed in the question? 10 into 20 percentage. 2, because there is no calls in arrears, there is no calls in advance, there is no, sir, any shares has been forfeited, buyback, nothing, no issues are there. If that is there, that will not work out. Generally in FM, it won't be there. Are you really with me? So, my dear lovable students, 2 per share. That means according to a typical shareholder, he invested how much per share? 2 rupees per share. Sorry, he get 2 rupees per share. But he has to invest in market 40 rupees per share. Right, sir? So, 2 divided by 40 into 100 comes to 5% is the dividend yield. 5% is the fantastic to the core. Are you clear? Coming to the next one, man. Sir, preference dividend coverage ratio and the equity dividend coverage ratio. On what you will pay preference dividend? PAT. So, preference dividend coverage ratio is equal to PAT divided by preference dividend. Right, sir? Tell me, my dear lovable students, what is the PAT you are having? 2,70,000 divided by preference dividend? 27,000 is the preference dividend. Am I right? Is equal to how much time? That means the preference shareholders can sleep very happily because they are having 10 times coverage. Are you really with me? Tomorrow, if 1 or 2 times the PAT reduces, also preference shareholders no need to worry at all because they are having that much coverage. Right, sir? Now, equity dividend coverage ratio is equal to residual earnings divided by equity dividend. Equity dividend. Right, sir? Padaka dosle divided by number of equity shares. Then answer will be EPS. Right? What is the residual earnings? 2,43,000 is the residual earnings. Right? Divided by how much total equity dividend? 1,60,000. Comfortable? Comes to 1.52 times is the equity dividend coverage ratio. If you are an equity shareholder, you are having only 1.52 times coverage. Correct? But preference shareholders is having coverage of 10 times. Are you able to appreciate? Fantastic to the core. The next one is EPS, earnings per share. Here itself we calculated 3.0375. Can I proceed? Now, price earning ratio. Price earning ratio is equal to MPS divided by EPS. That is equal to, what is MPS? 40 is the market price. But every share is earning 3.075. Comes to 13.17 times. Very good response from the market. Right, sir? Because we are having 13.17 times. Comfortable? Comfortable? My dear lovable students, this is the answer. I don't know whether it is right or not, and I am not worried about whether it is right or not. Fine, fantastic. Always in exam, when you are writing this answer, in the start of your answer, my dear lovable students, for example, if this is the start, you have to write that number 1. What is the first requirement? Dividend yield is equal to how much percent? 5%. Number 2, preference dividend coverage ratio is equal to 10 times. Equity dividend coverage ratio is equal to 1.52 times. Next, third one, EPS is equal to 3.0375 times per share. 3.0375 per share. Comfortable? And the fourth one, price earning ratio is equal to 13.17 times. Right, sir? For example, if I am the examiner, I will go and check that dividend yield is equal to 5%. Pakka, sir? In my answer key, I am having 5%. So, in the student's answer, 5%. Comfortable? The next one, number 2, preference dividend coverage ratio is equal to preference dividend coverage ratio 10 times. Comfortable? Equity dividend coverage ratio 1.52 times. 1.52 times. Comfortable? EPS is equal to 3.04 per share. 3.0375. Anyway, 3.04 per share. Comfortable? Price earning ratio is equal to 13.2 times. 13.17 times. Then I will be awarding 4/4 in the examination. And I will not look into these calculations, whatever he write. Are you really with me? If you are writing the answer like this EPS, don't expect examiner will go and check that. Yes, EPS. That will irritate him, my dear lovable students. Always any paper you are writing, whatever may be the paper, first start, you present the answer. If luckily our answers are right, whatever calculation we have done, even the calculation, sometimes we will do wrong also. Sir, if the calculation is wrong, how will get the final answer? No, I'm not saying that. Sometimes, sir, you would have written something. You would have scribbled something. That and all, sir, our property that you will be studying in SA 230 audit documentation. It is a property of the auditor, need not be shared with the client. But if law permits, if it is very required, he has to permit. Hello, sir. Sir, I'm with you, sir, from your heart. Anybody is there? Where is a grand clap? That's it with question number 2. We will be moving into question number 3. Before we move into question number 3, try the question and come to me. And, sir, we will have a 360-degree, sir, thinking of how to solve that question. That's it from the presentation area for question number 2. Sir, very, very, very happy afternoon to all. So, we are doing the book back questions of the ratio analysis. In that, we have solved question number 1 and question number 2. I am moving into question number 3. Ideally, a very good question for examination. Because like this missing figure and preparation of trading P&L account question only will come in exam. Following accounting information and financial ratios of PQR Ltd relates to the year ended 31st March. GP 15% of sales. So my dear lovable students, if you know what is the sales, sales can be classified into 2 categories. Number 1, gross profit ratio and cost of goods sold. GP at the rate of, so ideally cost of goods sold at the rate of 85%. I'm proceeding. Net profit 8% of sales. If 100 rupees is the sales, 8 rupees is the net profit. So 92 rupees is the balance, all the other expenses, right, sir? Raw material consumed 20% of the works cost. Works cost is otherwise called as factory cost. Works cost is otherwise called as factory cost. Direct wages 10% of the works cost. Works cost is otherwise called as factory cost. They are having the habit of keeping stock of raw material, which is 3 months usage. Stock of finished goods 6% of the works cost. Debtors collection period, all sales are on credit. 60 days debtors will be outstanding as receivable. Additional information, fixed asset to sales 1:3. Fixed asset to current asset 13:11. Current ratio 2:1. Long-term debt to current liability 2:1. Share capital to reserves and surplus 1:4. If value of fixed asset as on 31st March 2022 amounting to 26 lakhs, this is my hope for my life, because that with that one figure or amount only, I will start proceeding the sum. Prepare a summarized P&L account of the company for the year ended 31st March 2023 and also the balance sheet as at 31st March. My dear lovable students, when you are having an amount is given in the question, start with that amount. That's what our shortcut. So fixed asset is equal to 26 lakhs already given in the question. So fixed asset is equal to 26 lakh. I will search all the details relating to the fixed asset. So they have said that fixed asset to sales. So fixed asset divided by sales is equal to 1 by 3. That is equal to 26 lakh divided by sales. I can cross multiply. So my dear lovable students, sales is equal to 26 lakhs into 3 comes to 78 lakh is my sales figure. 78 lakhs is my sales figure. Comfortable? Sir, I already know that. Sir, 78 lakh into 15 percentage will be my gross profit. So 78 lakh into 15 percentage comes to 11 lakh 70,000 is what my gross profit. Right, sir? Sir, 78 lakh minus 11 lakh 70,000. 78 lakh minus 11 lakh 70,000 comes to 66 lakh 30,000 is the cost of goods sold. Is the cost of goods sold. Comfortable? You know one thing, my dear lovable students, first understand the term cost of goods sold. Cost of goods sold means opening stock. Cost of goods sold means add purchases. Add minus closing stock. Minus closing stock. You will get the cost of goods sold. You will get the. So basically, typically opening stock plus purchases minus closing stock is what? Cost of goods sold. Cost of goods sold. For example, sir, 80 rupees goods I have sold for 100 rupees means 20 rupees is a gross profit. 20 rupees is the, because cost plus profit is only selling price. That we all know. Correct, sir? So my dear lovable students, if 80 rupees is the cost price and 20 rupees is the profit, I can say that 100 rupees is the selling price. Sir, in order to manufacture a product, you need direct material. You need what? Assume you are manufacturing this pen. In order to manufacture this pen, we need material, right, sir? Add direct labor. Add what? To that material, we have to apply labor. To that material, we have to apply labor. And my dear lovable students, you know, this pen should be in this shape. This shape is designed by a Japanese company. So I am using the shape of a Japanese company. Japanese company said that for every one pen you produce, you are liable to pay us 5 rupees royalty. You are liable to pay us 5 rupees royalty. So direct expenses will be 5 rupees. Direct expenses will be. So direct material plus direct labor plus direct expenses will be prime cost. Will be what cost? Prime cost. So these are the primary cost, my dear lovable students. Direct material plus direct labor plus direct expenses will give you prime cost. So I am having material in my hand, which is raw material. I will be applying labor to that raw material and I will be paying royalty to the Japanese company to use this shape. Then only pen will come in this shape. That is called as prime cost or primary cost. Prime cost or primary cost. Prime cost or primary cost. Sir, I will be assembling this material, assembling the labor and assembling the expenses at the factory called as factory overhead. What overhead? So add factory overhead will give the gross factory cost. Will give the, in factory, my dear lovable students, WIP will be there. Work in progress will be there. In factory, work in progress will be there. Add opening stock of WIP. Add opening stock of, less closing stock of WIP. Less closing stock of, you will be getting the net factory cost or factory cost or what? Factory or works cost or what man? Works cost or what man? Works cost. So my dear lovable students, direct material plus direct labor plus direct expense will give you what cost? Prime cost. Are you really with me? Add factory overhead will give you the gross factory cost. Gross factory cost. Add opening stock of WIP, less closing stock of WIP, you will get the net factory cost or factory cost or works cost. Why I am explaining this to you is because the entire sum is based upon the works cost. Is based upon the works cost. Are you really with me? Because you should know what is works cost. Works cost means material. Works cost means labor. Works cost means expenses, prime cost. At factory overhead. Plus or minus WIP is what the works cost. But works cost information has not been given in the question. Works cost information has not been given in the question. So my dear lovable students, from the sales, if I reduce the gross profit, I will be getting cost of goods sold. I will be getting cost of goods sold means opening stock plus purchases minus closing stock. Right? Sir, plus purchases, sir, minus closing stock. Cost of goods sold. That means, sir, 80 rupees is the cost of the goods which I have sold. In that cost of goods sold, direct material will be there. Direct labor will be there. Direct expenses will be there. Prime cost will be there. Yes, sir. Sir, in this question, all the information are linked to the works cost. 20% of the works cost. 10% of the works cost. 6% of the works cost. Right, sir? So, in this question, since works cost is not available, I have to assume that cost of goods sold is equal to works cost. I have to assume that cost of goods sold is equal to. Technically, cost of goods sold are not works cost. Hello? Sir, technically both are one and the same. Sir, works cost will be applicable for a manufacturing concern. Works cost will be applicable for a cost of goods sold will be applicable for a trading concern. Cost of goods sold will be applicable for a, but inside cost of goods sold, you are having material, labor, overhead, all those stuffs will be there. So, since no other information is available in the question, I am assuming that cost of goods sold is equal to works cost. That is equal to, sir, how much is the amount we got? 66,30,000. 66,30,000. 66,30,000. Comfortable, sir. Now, I can find out three things once I get the works cost. Number one, they are saying that direct material. So, material, raw material consumed will be 20% of the works cost. 20% of the works cost. Comfortable? And number two, I can find out the direct wages, my dear lovable students. Direct wages is the 10% of the works cost. 10% of the works cost. Comfortable? And my dear lovable students, stock of finished goods. Stock of finished goods will be 6% of the works cost. 6% of the works cost. Comfortable, sir? So, my dear lovable students, 66,30,000 into 20% comes to 13,26,000 is the raw material consumed. Raw material consumed. Comfortable? Sir, 66,30,000 into 10% comes to 6,63,000 is the direct wages. Comfortable, sir? Sir, 66,30,000 into 6% comes to 3,97,800 is the stock of finished goods. Stock of finished goods. I have breaked the question basically. Gross profit I have used. By using the gross profit only, I find out the cost of goods sold. Since no other information is there to find out the works cost, because in order to find out the works cost, I need direct material, direct labor, direct expense, prime cost, add factory overhead, I should get the gross factory cost, plus or minus WIP, I should get the net factory cost, otherwise called as factory cost, otherwise called as works cost. Clarity? Since no other information is there, my dear lovable students, I can say that cost of goods sold is equal to works cost. I use the gross profit. I can find out the net profit because I am having sales with me. Do you have the sales with me? What is the sales figure? I got 78 lakh, right, sir? So, if you want, I can write here as net profit is equal to sales into how much percent? 8%, which is equal to 78 lakh into 8%, comes to 6 lakh 24,000. 6,24,000 is the net profit. 6,24,000 is the net profit. Comfortable, sir? So GP, I use 15% of sales. Net profit, 8% of sales. Hello, sir. Raw material consumed, I find out because I worked out the works cost. Direct wages, I have find out 10% of the works cost. Stock of raw material usage. Stock of raw material usage. You tell me, my dear lovable students, you know how much is the raw material consumed, correct? Raw material consumed is equal to 13,26,000. For example, let me ask you a question. In your home, daily 5 kg of rice, 5 kg of rice you are consuming. Amma is consuming 5 kg of rice. How many days are there in a year? 365 days. There is no change, there is no amendment, right, sir? Except if it is not a leap year. So 365 into 5, 1825 kg is the annual consumption. Is the what consumption? Amma is of the opinion that any time if she open the jar or the dabba, she want to have 15 days rice. How many days rice? It gives her satisfaction because it gives her satisfaction that for next 15 days at least what is there? Rice is there. It will not amount to stock out. If Appa goes out or if Appa is not coming to home because of his office work, sir, next 15 days, even my son or daughter will not buy rice also. No problem. So 15 days into how much kg? 5 kg. 75 kg is the rice stored in the dabba. Are you able to appreciate? The same thing only they are saying, sir, stock of raw material is how much months usage? So, in a year you have consumed 13,26,000 raw material, correct? This is for 12 months. This is for. So, this company is having the policy of maintaining how much months raw material stock? 3 months raw material stock. Easy, no? So, raw material stock is equal to 13,26,000 divided by 12 months into 3 months comes to 3,31,000. 3,31,500. Are you able to appreciate? That also I have breaked. Are you able to understand what is 3 months usage means? Amma is going to have 1,825 kg of rice in the dabba. In that, it is the policy of the Amma. Sir, Amma can have 20 days stock also. She can have 30 days stock also. Hello, sir. Yes, sir. But she will never have 365 days stock. Then it is not called a stock. Understanding? So, she is having the policy of keeping how many days stock? 15 days stock. The same way this company is having 3 months usage. Why, sir? Because in 3 months sometimes strike may come. Sometimes my creditor will not supply. Sometimes, sir, I may out of stock. In order to avoid that, always I will keep 3 months, sir, raw material consumption as what my stock. Are you able to appreciate? Yes, sir. Sir, stock of finished goods, 6% of the works cost we already done. Data's collection period, how many days? 60 days. All sales are on what? Credit. That means, my dear lovable students, total sales is equal to credit sales. What is the total sales? We already find out. 78 lakhs. My dear lovable students, 78 lakhs is the total credit sales. It's like 1,825 kg in the dabba. Are you really with me? Sir, it is for 365 days. In question, have anywhere they said that assume 360 days? No, sir. Then it will be 365 days. Hello, sir. But they are having the habit of how many days data's collection period? 60 days. So, 78 lakhs divided by 365 into 60 comes to 12,82,192 rupees is going to be the creditors. Is going to be the creditors. That means this is how much days credit sale? 60 days credit sale. 60 days credit sale. Nothing. What is the credit sale? You are having 78 lakhs as credit sales are. Divided by what? 65. 365 means credit sales per day. You will get what sales per day? 78 lakhs divided by 365 comes to 21,369.86. I'm just taking the fractional figure. So every day the firm is making 21,369.86. என்னப்பா comfortable? Company is having the policy to keep how many days as debtors collection period? That means this into 60 will be, sir, 1 lakh, 12 lakh, 82,192. Comfortable? Are you able to appreciate? Sir, additional information. With that additional information only we have started. Can we start, man? Fixed asset is equal to how much lakh? Is there any ratio related to fixed asset? Yes, 1:3. Fixed asset to what? Sales. We have already done that. By that only we got the sales as 78 lakh. From there only we classify the sales into two, sir, GP and the cost of goods sold. We have taken cost of goods sold as the works cost. Then we have applied based upon the information given in the question. Can I proceed? Now I am having fixed asset to what asset? Current asset. Can I apply, sir? The second ratio I am applying, fixed asset divided by current asset is equal to 13 divided by 11 is equal to 26 lakhs divided by current asset. Can I proceed, sir? Sir, 13 current asset is equal to 26 lakh into 11. Comfortable, sir? Sir, 13 current asset is equal to 26 lakh into 11 comes to 2 crore 86 lakhs. That means current asset is equal to 2 crore 86 lakhs divided by 13 comes to 22 lakhs is the total current asset. Comfortable? Total current asset is 22 lakh. This comprises of inventory, this comprises of debtor, this comprises of closing stock. That means the current asset of how much lakh? 22 lakh should be classified into the elements of current asset. Right, sir? Such as, what are the items available, my dear lovable students? In this question, raw material stock is available. Correct? Raw material stock is how much month? 3 months. Already given in the, we find out raw material stock is equal to 3,31,500. 3,31,500. Can I proceed? Sir, we are having finished goods stock. They said that 8% of the works cost. Are you remembering? 8%, 6% of the works cost. Are you remembering? Which comes to 3,97,800. 3,97,800. Comfortable? Sir, they said that data should be how much they sale? 60 days sale. I worked out already datas. The datas will be 12,82,192. 12,82,192. Comfortable? My dear lovable students, the balance will be other current asset or cash. Other current asset or? Is there any other item of current asset given in the question? I think no. So 3,31,500 plus 3,97,500, 800 plus 12,82,192 comes to 20,11,492. So 22 lakh total current asset minus 20,11,492 comes to 1,88,508. Either you call this as cash or you call it as other current asset. That is your wish. I don't have any problem. If balance sheet format has been given, they will specify that whether that is cash or other current asset. Comfortable? Otherwise, it's free to assume. Sir, I will assume it as cash because generally without cash we can't run the business. Right, sir? That's it, my dear lovable students. Done. So fixed asset to sales ratio broken. Fixed asset to current asset broken. Are you really with me? And they are having what ratio? Current ratio. Sir, do you have current asset with you? Yes, sir. Current ratio is equal to current asset divided by current liability. That is equal to what is to what? 2 by 1. 2 by 1. That is equal to 22 lakhs divided by current liabilities. Comfortable? That means 2 current liabilities is equal to 22 lakhs. Comfortable, sir? Current liabilities is equal to 22 lakhs divided by 2 comes to 11 lakhs. I have break the current liability. That also I have done. Comfortable? Now I am having current liability. With that I can find out the long-term loan. Right, sir? The next ratio I can apply, my dear lovable students. Long-term loan to what liability? Is equal to 2 by 1. Comfortable? Is equal to long-term loan divided by 11 lakhs. That means long-term loan is equal to 11 lakhs into 2 comes to 22 lakhs is the long-term loans. Comfortable? Now share capital to reserves and surplus is what is to what? 1:4. Sir, share capital to reserves and surplus is equal to 1/4. Yes, sir. I don't know what is a share capital. I don't know what is the net worth. Basically, I know that share capital plus reserves and surplus is equal to net worth. Right, sir? If I put the balance sheet, I will get the net worth as a balancing figure because all other item I have NSR are taken care. Right? Now, I am having the freedom to prepare the trading account and also the balance sheet. Can we? Are we understanding this? My dear lovable students, my hero is sales. Correct? How much sale? 78 lakhs is my sale. My dear lovable students, I am having cost of goods sold. How much is the total cost of goods sold? 66 lakh, which comprise of material, labor and other expenses. I am having split. So I won't write cost of goods sold. Right, sir? So 2 raw material consumed is how much? 13 lakh 26,000. Are we understanding? 2 direct labor, direct wages, direct labor comes to 6 lakh 63,000. Comfortable? My dear lovable students, 2. Is there any other item? No. But I know the total of cost of goods sold should be 66 lakh 30,000. So calculator, 66 lakh 30,000 minus 13 lakh 26,000 minus 6 lakh 63,000 comes to 46 lakh 41,000. 46 lakh is the manufacturing overhead or production overhead. Manufacturing overhead or, because balancing figure, I don't have any other NSR way. Direct wages, direct labor, direct wages. Labor means wages. Are you really with me? Sir, a student may commit a mistake that by closing stock they may write. What they may write? Sir, if you write the closing stock, it will pulls down the cost of goods sold. It will pulls down the. If you are having the idea of writing the closing stock, my dear lovable students, you have to write the raw material and the finished good stock. What is the raw material stock? 3 lakh 31,500. What is the finished good stock? 3 lakh 97,800. You have to add this both and should be added to this manufacturing overhead or production overhead. Then automatically it will get cancelled. That means my agenda is, if I add raw material consumed plus direct labor plus manufacturing overhead minus closing stock, I should get 66 lakhs 30,000. Logic concept clear? If you don't, NSR, if you want to show the, sir, trading account with the stock, my dear lovable students, then I have to do like this. Or I have to write to opening stock as the same figure. That is also allowed. I have to write the opening stock with the same figure. Okay, fine. I'll be doing. Wait. You all are looking like something. Sir, assume that I am crediting the closing stock, my dear lovable students. If I credit the what stock? Closing stock. Credit the closing stock. Shall we check the GP? Take the calculator, man. 78 lakh plus 3 lakh 31,500 plus 3 lakh 97,800 comes to 85 lakh 29,300. Right, sir? Minus 13 lakh 26,000 minus 6 lakh 63,000 minus 46 lakh 41,000 comes to 18 lakh 99,300. Right? This is the what profit? Gross profit. But what is the correct gross profit? Sales into 15% comes to 11 lakh 70,000. Are you getting 11 lakh 70? No. Because you unnecessarily credited the closing stock. Like this, you are not supposed to present. Can I proceed? This is wrong. So, in order to counter that, what I can do is 3 lakh 31,500 plus 3 lakh 97,800 comes to 7 lakh 29,000. This I can add along with this figure. That is, I can make it as 46 lakh 41,000 plus that one comes to 53 lakh 70,300. Are you really with me? Then this figure will be 53 lakh 70,300. Are you able to appreciate? Then the credit side will not change. It will be 85 lakh 29,300. Are you all really with me? minus 13 lakh 26,000 minus 6 lakh 63,000 minus 53 lakh 70,300 comes to how much is the GP? 11 lakh 70,000. What is the sale? 78 lakhs. So 78 lakhs into 15% comes to 11 lakh 70,000. You may have a doubt. Sir, how I can add the value of the closing stock with a balancing figure? Comfortable? Then you do one thing, my dear lovable students. To what stock? Opening stock. You don't add this along with the manufacturing overhead or the production overhead. Hello? What you can do to opening stock? What material? Raw material and finished goods. Are you really with me? Which comes to 3,31,500 and 3,97,800. Comfortable? Same opening stock, same closing stock. As if I am not writing the stock. Hello? Then automatically, sir, 13,26,000 plus this 13,26,000. 6,63,000 minus 66,30,000. I will be getting 46,41,000 as the manufacturing overhead. Are you follow me? Able to appreciate? That means, my dear lovable students, either you don't present the what at all, closing stock at all. Because if you are alone presenting the what stock, closing stock, your COGS will come down. Able to appreciate? If you want to present the what stock, closing stock, parallel amount, you show it as what stock? Opening stock. How, sir, the same amount will come as what stock? Opening stock. Question arises, correct? Sir, this month, this year, Amma is thinking that 15 days rice should be in stock. Last year, Amma would have thought that 25 days are same 15 days are. Opening stock is equal to closing stock only. What is the problem? Are you all really with me? So, it is logical to think that opening stock will be equal to the closing stock, my dear lovable students. Are you able to appreciate? In order to remove the confusion, I will not write the stock at all. I will not write even both what stock or what stock. Opening stock, and according to me, if I add the raw material consumed plus direct labor plus manufacturing or production overhead, I should get the what of goods sold. That's it. That's it. Sales minus cost of goods sold. I should get the GP. Can I proceed, man? So, by gross profit brought down comes to 11 lakhs 70. I will be having to net profit, right, sir? Already given in the question. Sales into how much percent? 8%. Comes to 6,24,000. 6,24,000. So, technically, my indirect expenses will be 11,70,000 minus 6,24,000 comes to 5,46,000. I don't have any further classification. Sir, debt has been given, but percentage of debt has not been given. If percent of debt has been given, I would have split into interest and other than interest. Comfortable? That's it, my dear lovable students. I am coming with the balance sheet. Can we? Fixed assets, they themselves given in the question. What is a fixed asset? 26 lakhs. That's my starting point. Current asset, I calculated total as 22 lakhs. This comprises of number one, stock of raw material. How much raw material stock? 3,31,500. Stock of finished goods? 3,97,800. Comfortable? Then you are having debtors 12,82,192. The balance we have assumed as cash. How much? 1,88,508. Comfortable? So 26 lakh plus 22 lakhs comes to 48 lakh is the total asset side total. Comfortable? If that side is 48 lakh, if this side will also be 48 lakh. Comfortable? And current liability has been given in the question. How much current liability? 11 lakhs is the current liability, and there is no further bifurcation of the current liability. Comfortable? So, my dear lovable students, my capital employed, which is not long term, debt is there. Okay, so I will be writing current liability 11 lakhs below. So, current liability 11 lakhs, right? I am having long term debt given 22 lakhs. So, total should be 48 lakh, right? So, calculator 48 minus 22 minus 11 should be 15 lakhs should be equity, share capital and reserves and surplus. So equity, share capital, and what? Reserves and surplus. Right? Sir, equity to reserve is equal to 1:4. That means 1 plus 4 is equal to 5. 5 is equal to 15 lakhs. Inside this both, equity will be there and also reserves will be there. Enapa comfortable? My dear lovable students, equity 15 lakhs into 1 by 5 comes to 3 lakhs is the equity. So automatically 15 lakhs minus 3 lakhs comes to 12 lakhs is the reserves and surplus. I can write that equity is 3 lakh, reserves and surplus is 12 lakh, total comes to 15 lakh, total 48 lakhs. Can I check the answer for this question? By sales, have we got 78 lakh? Yes sir, ICA has not written closing stock. If we want to write closing stock, how to adjust the trading account? I said clear. To material, direct material 13 lakh 26,000. To direct wages 6 lakh 63,000. To works overhead called as production overhead, called as factory overhead. Any technical term, if you want, you can use it. The GP will be 11 lakh 70,000, which is nothing but sales into 15%. If you add all this, you will get sales into 85%. Can I proceed, sir? Basically, this GP has to be brought down by GP 11 lakh 70,000 to net profit already given in the question as 6 lakh 24,000. Comfortable? Sir, the balance will be, they have treated it as selling and distribution expenses. I have called it as indirect expenses. I don't know, no clue in the question that it is selling and distribution expenses, right, sir? They have not asked us to treat the balance as the selling and distribution. It may be administration also. So I will be writing it as indirect expenses, or I can write that administration and selling and distribution overhead. That will be fine and better and escape route, right? I will be having balance sheet as on 31st March. Fixed asset already given in the question. Current asset stock of raw material 3,31,500, which is 3 months consumption. Stock of finished goods is 3,97,800, 6% of the works cost. Receivable I have find out. Total credit sales into how many days? 60 days receivable. Balance they have treated as cash. Even I also treated as cash. 22 lakhs plus 28 lakhs comes to 48 lakhs. Comfortable? Same 48 has been dragged here. 11 lakh current liability we find out. 22 lakh long-term loan we find out. And total 15 lakhs is the capital. We have bifurcated that between 3 lakh and 12 lakh. If you want, you can show out of this 12 lakh, 6 lakh 24 is of the current year profit and balance is the opening P&L balance. If you want, that is also allowed. Are you really with me? That's it, my dear lovable students. Sales they have calculated. Everything we have also calculated. This is for your cross reference. Raw material, direct wages, stock, sir, stock of finished goods, current liability 11 lakhs we got, receivable we got, sir, and the long term loan we got 22 lakhs and cash balance 1,88,508 and the net worth comes to 48 lakhs. Here 15 lakhs is the balance. That has been classified as 3 lakhs and 12 lakhs. Are you comfortable? This is a maximum possible intrigancies this question will be having. I am with you, sir, from your heart. Anybody is there? Where is a grand clap? I just want to ask you a question that two type of students will be there. First of all, you would have not tried this question. You will be hearing for the first time. Then you would have understood that I am an excellent problem solver. You are solving fantastic, beautiful, sir. Know where you are stucking. You are starting the question. You are solving. Wow. That knowledge you would have got. Second category of students, they would have tried and they would have got the answer. They would have having doubts. They would have got the answer. Sir, you will be getting lot of different angles when I am explaining. That is the treasure you will be getting from my side. And if you are stuck when you are doing the question, you will learn how to approach a question. Anyone have gone wrong when you solve this question? Raise your hands. Fantastic. I feel very happy. Thank you, sir. After you close this video, my dear lovable students, immediately you have to redo this question. Then you will start get a grip of the ratio analysis. And before you see the lecture of question number 4, try by yourself, then see, then only virtual, my dear lovable students, it will be worth. Otherwise, it will be like you are listening to my class, just, sir, hearing. That won't make you prepare for the examination. I am waiting for you to try question number 3, redo question number 3, try question number 4 and come back to me. I'm with you from your heart. Anybody is there? Where is a grand clap? Sir, very, very, very happy afternoon to all. Sir, we are in the mission of completing book back of the ratio analysis. In that, we are in question number 4. Ganapati Limited has furnishes the following ratios and information relating to the year ended 31st March 2023. Sales 60 lakhs. How much is the sales? So sales is equal to 60 lakhs. Yes, sir. I think we can proceed. Things are right now. Return on net worth 25%. Return on net worth is equal to. So there is one information, we can use that information. Rate of income tax is 50%. Share capital to reserve, basically share capital divided by reserve is equal to 7/3. Total 10. Current ratio 2:1. If 2 rupees is a current asset, 1 rupees is a current liability. Net profit to sales 6.25. Wow, fantastic to the core. With this, I can find out the net profit because sales is available. So sales into 6.25% will be the net profit. Inventory turnover ratio, based on cost of goods sold, they specifically said, is 12 times. Super, sir. Cost of goods sold has been given in the question. Wow. Cost of goods sold has been given in the question. So 12 is equal to 18 lakhs divided by average stock. If no information of opening stock has been given in the question, we can take the average stock as closing stock as average stock. Interest on debenture 60,000 rupees. This would have been debited to P&L account. Receivable 2 lakh. Payable 2 lakh. Fine. You are required to calculate the operating expenses for the year ended 31st March 2023. A brilliant question. Prepare a balance sheet as on 31st March 2023 in the following format. They themselves given the format. Balance sheet as on 31st March. You have to find out the fixed asset, current asset, stock, receivable, cash, payable, 15% debenture, reserves and surplus, share capital. In that they have given receivables as 2 lakh. So I can fill receivables as 2 lakh now itself. Correct, sir? They have given payables as 2 lakh. I can fill payables as 2 lakh now itself. Yes, sir? Sir, 15% debenture they are saying. And they have given interest on debenture as how much? 60,000. So the 60,000 will be 15%. Am I right, sir? So 60,000 divided by 50% comes to, I can fill debentures also as 4 lakh. So my dear lovable students, from this sales, can I work out the net profit? So sales, sir, is 60 lakh. Net profit is equal to 6.25% of sales. Correct, sir? So 60 lakhs into 6.25% comes to 3,75,000 is a net profit. As we all know that net profit is equal to PAT, profit after tax. Net profit is equal to PAT, profit after tax. Correct, sir? Because generally in accounts we will debit the income tax to the P&L account. So after the tax only we will be calling it as PAT. From the PAT only we will pay the dividend. Because as we all know that EBIT, earnings before interest and tax, minus interest will be the earnings before tax. From that, if you reduce the tax, you will get a PAT, profit after tax. This is what we got the answer as 3,75,000. And this PAT will be 50%. Because they said in the question that rate of income tax is 50%. So if I pay 50% tax, then only I will be having remaining 50% PAT. So the tax will also be how much? 3,75,000. So the earnings before tax will be 3,75,000 plus 3,75,000. Right? Comes to 7,50,000 is the earnings before tax. Comfortable? Interest already given in the question as 60,000 is the interest. 60,000 as the interest. Right, sir? So 7,50,000 plus 60,000 comes to 8,10,000 is the EBIT. This is equal to operating profit. This is equal to operating profit. My dear lovable students, from the sales, generally I am saying, from the sales, sir, if you take the T-shaped P&L account, you will be having buy sales on the credit side of the trading and P&L account. Technically, P&L account I will use. Sir, to cost of goods sold will be there. To what of goods sold? Which is nothing but inventory details. Basically, opening stock of raw material, add purchases of raw material, minus closing stock of raw material is called as cost of goods sold. I will be getting gross profit. I will be getting that gross profit. I will be crediting to the P&L account. That gross profit I will be crediting to the P&L account as by gross profit. By gross profit. Are you all really with me? In the P&L account, I will be debiting all the indirect expenses. Such indirect expenses can be classified into two categories. Number one, to operating expenses. To operating. Such as you are paying salary. You are paying salary to operating the business. But you are paying interest not to operate the business. That is a finance cost. That is a bank charges I am paying not to operate the business. It is to operate the bank account. Correct? So, I can debit, my dear lovable students, to what expenses? Operating expenses. And to other than operating expenses. And to other than, basically in accounts, we will call everything as indirect expenses. But in FM, we will categorize as operating expenses and non-operating expenses. Technical word is non-operating expenses. What man? Then automatically the profit, net profit, you will be getting comfortable. Now, I will be filling the data. Is the sales given in the question? Yes, sir. How much? 60 lakhs is the sales. 60 lakhs is the sale. Is the cost of goods sold given in the question? Yes, sir. How much? 18 lakh is the cost of goods sold. Sir, 60 lakh minus 18 lakhs comes to 42 lakhs is the gross profit. Oh my God, what a GP. Because 18 lakh rupees goods you sold for 60 lakhs. Wow. So my dear lovable students, you are having gross profit, correct sir? What is the gross profit? 42 lakhs is the gross profit. 42 lakhs is the gross profit. You tell me, is a net profit available in the question? Yes sir. The net profit comes to 3,75,000 is the net profit. 3,75,000 is the net profit. Correct? In that, I understood that, my dear lovable students, I am having tax. Tax will be debited to P&L account. What is the amount of tax? 3,75,000 because tax rate is also 50%. Correct? So, I would have debited to tax 3,75,000. 3,75,000. Correct? So, basically what I have done is, from the sales of how much lakh? 60 lakh. I have reduced the cost of goods sold of 18 lakh. I got the GP, gross profit of 42 lakhs. Up to this, are you clear? From this gross, this is not my EBIT. This is not my profit. Correct? Sir, from this GP, I have to reduce the operating expenses. I have to reduce the non-operating expenses. Then I will be getting a profit called as net profit. This is what I have written above. Are you able to appreciate? What is the net profit? 3,75,000. And I am having one more thing called as income tax. That is also 3,75,000. And I would have debited interest to my what account? P&L account, which is comes to 60,000. Comfortable? That means, my dear lovable students, I have to find out operating expenses and non-operating expenses. Correct? Can I say that interest and income tax is the non-operating expenses? Is interest a non-operating expense? Because it's a what cost? Finance cost. Is income tax debited to P&L account is a non-operating expense? Because in order to operate the business, I am no need to incur tax. After I done the business, after I got the profit, only I am liable to pay the tax. So income tax is not a operating expenses. Sir, interest is not a operating expenses. So my total non-operating expenses will be how much lakh? 3,75,000 plus 60,000 comes to 4,35,000. Are you really with me? Are you really with me? So, my dear lovable students, my total non-operating expenses is what and what? Interest and income tax, which total comes to 4,35,000. Comfortable. I have to calculate the what expenses. So, you tell me, from 42 lakh, I have to reduce some amount and I have to reduce 4,35,000. Then my answer will be 3,75,000. Am I right, sir? So, if I reduce, sir, how much I will be getting? 3,75,000. 33,90,000 should be my what expenses. I am coming what they have done. Listen here, man. Calculation of operating expenses for the year ended 31st March. First, they have calculated EBIT. Even we also calculated EBIT, right? Net profit, sir, 6.25% of the sales. So, sales into 6.25%, 3,75,000. Have we got? Have we got? Add what tax? Income tax. Because we would have got PAT. PAT is after tax. Are you remembering that format what I have written? I am adding back the same amount of income tax. I will be getting earnings before tax of 7,50,000. Comfortable? During to that, I have to add the interest of 60,000. So, I will be getting EBIT of 8,10,000. Earnings before interest and tax. Have we also got this? Now, I am calculating the what expenses? Operating expenses, which is nothing but sales. In our trading and P&L account, by sales, 60 lakh. Are you able to appreciate? Less cost of goods sold is how much lakh? 18 lakh. Actually, sales minus cost of goods sold is what? GP. That GP actually we have to credit it to the P&L account. In P&L account debit side, two expenses will be debited. Operating expenses and non-operating expenses. Correct? There are two non-operating expenses are there, my dear lovable students. Interest and tax. Comfortable? Are you all really with me? So, we have reduced the what and what? Interest and tax. We got operating expenses as 33,90,000. They also got 33,90,000. Comfortable. But what they have done from the sales, they have reduced the what of goods sold? Cost of goods sold. Correct? Sir, sales minus cost of goods sold is equal to gross profit. So, 60 lakh minus 18 lakhs comes to 42 lakh is the gross profit. Can I proceed? Actually, there is a difference between gross profit and the net profit. Correct? Generally, the difference between gross profit and the net profit is operating expenses and the non-operating expenses. That's what the total indirect expenses. Are you able to appreciate? Sir, I just want you to think what the question is. I don't want the answer. Always I am having that principle. Are you able to thinking? The difference between the gross profit and the net profit is the total indirect expenses, which as per our subject we can say that it is operating expenses. And so we have actually we also got 42 lakhs, right? From that 42 lakhs we have reduced 4,35,000 as non-operating expenses. Hello sir. And 3,75,000 as net profit. Correct? Which is nothing but calculator. 4,35,000 plus 3,75,000 comes to 8,10,000. That's 8,10,000 is what? EBIT. Are you really with me? That they have reduced in one shot as EBIT 8,10,000. Then they got the operating expenses of 33,90,000. Are you able to appreciate? Sir, I am giving a different angle of the ICAI. This is our normal trading P&L account. I just want to ask you a question. You want repeat? Can I proceed? Everyone proceed? Thank you, sir. I am coming, man, to the next balance sheet. Balance sheet, I can, sir, place the various things. Sales anyway will not come in balance sheet. Correct, sir? They are saying that return on net worth. Return on? Generally, return on net worth is equal to return divided by net worth. Correct, sir? Basically, return means PAT, profit after tax. Basically, PAT means net profit. Right, sir? This is equal to what they are saying is 25 divided by 100. Can I proceed, sir? That is equal to what is the return we got? Net profit. So, 3,75,000 divided by net worth is equal to 25 divided by, that means cross multiply. 25 net worth is equal to 3,75,000 into 100. Can I proceed? So net worth is equal to 3,75,000 into 100 divided by 25. Are you really with me? So 3,75,000 into 100 divided by 25 comes to 15 lakhs is the net worth. As we all know that net worth can be classified into two categories, correct? Number one, equity and reserves and surplus. Have they given the ratio among them? 7:3. That means total 10. 7 plus 3, 10. The total is 7 plus 3 is equal to 10. Correct? So, the equity, that is basically share capital. Instead of equity, I am calling it a share capital because in question also they call it a share capital. Are you all really with me? Which is nothing but 15 lakhs into 7 by 10 comes to 10,50,000. Comfortable? So automatically reserves and surplus will be 15 lakh minus 10,50,000 comes to 4,50,000. Are you really with me? Can I update the balance sheet, sir? What is the share capital? 10,50,000. Reserves and surplus. Total comes to 15 lakhs plus 4 lakh. 19 lakh plus 2 lakh. So can I update the asset side of the balance sheet? That should also be 21 lakhs. Just dragging. Comfortable? I'm proceeding, my dear lovable students. So I have done with the return on net worth data. I have used, sir, rate of income tax. I have used. Hello, sir. Rate of income tax I have used for the P&L account. Sales I have used for the P&L account. Correct? Share capital to reserve data I have used for the balance sheet. Correct? Now they are having what ratio? Current ratio. Simple, directly given 2. And they have said that the payables are 2 lakh. That means that is a current liability. Correct? So the next one, current ratio is equal to current asset divided by current liability. That is equal to 2 by 1. Comfortable, sir? So that is equal to, you know the current asset? No. Divided by what is the current liability? 2 lakhs is the current liability. So 2 lakh into 2 is equal to current asset. So current asset should be equal to, have we freeze the current asset? I am updating the balance sheet, my dear lovable students. Sir, current asset, total current asset is how much lakh? 4 lakh. In that, I know only one thing, receivable is 2 lakh. So the remaining 2 lakh will be comprises of stock and cash. I'll come at the appropriate time. I'm reading the next data. That's it. Net profit to sales I have used to find out the P&L account. Inventory turnover ratio. Can I take? This question is having any hint of opening stock. So can I take the closing stock as average stock? That means, my dear lovable students, inventory turnover ratio is equal to cost of goods sold divided by average stock of inventory, finished goods basically, or closing stock. Are you all really with me? Or what stock? Closing stock. Sir, inventory turnover ratio how many times? 12 times is equal to, what is the cost of goods sold given? 18 lakhs divided by, what is the closing stock? I don't know. Are you all really with me? So I can cross multiply. 12 closing stock is equal to how much lakh? 18 lakh. So closing stock is equal to 18 lakhs divided by 12 comes to 1 lakh 50,000 is the closing stock. Comfortable? If the closing stock is 1 lakh and 50,000, automatically I can, the balance 50,000 will be the cash. Correct? Yes, sir. In question, I'm filling, man. 1,50,000 is the stock and cash will be 50,000. If you add all, total current asset will be, okay, man, current asset, this is what the total, the split of current asset has been filled. Sir, very simple, sir. If total asset is 21 lakh, in that 4 lakh is the current asset, automatically 21 minus 4 comes to 17 lakh should be the what asset. That's it. My balance sheet got tallied. Are you all really with me? Still, I am having further more information. Cost of goods sold. I have used that for my P&L account. Are you all really with me? Interest on debenture. I have used this in two ways to find out the non-operating expenses. and also the amount of debenture. Comfortable? By reversing this only I have done. Receivable directly pasted under the current asset. Payable, I have used that to find out the current asset by converting that as current liabilities. Comfortable, sir? Calculate the operating expenses we have done. Prepare a balance sheet. My balance sheet got tallied. I hope that you are also, sir, fantastically able to appreciate this 21 lakhs total. Are you all really with me? And every working note has been attached. Net worth is total how much lakh? 15 lakh. In that, share capital is 10 lakh 50,000. And reserves and surplus is 4 lakh 50,000. Comfortable? Debenture is how much lakh? 4 lakh. And current asset is total comes to 4 lakh. In that fixed asset, sir, they have done some calculation, but in 1 second I have calculated total asset side minus the total current asset. Correct, sir? Fixed asset, they got 17 lakh. We also got 17 lakh. Total current asset comes to, sir, in that total composition of current asset, composition inside the current asset closing stock is there. Stock comprised of 1 lakh 50,000 and balance cash in hand we got as how much? 50,000. Are you really with me? Sir, I am able to appreciate the entire calculation of this question, sir. Question number 4 is in my hand. Yes, sir. Have you, anybody of you tried this question? Have you got the right answer? Please raise your hands. How many of you got the right answer? Fantastic, sir. My dear lovable students, those who are in virtuals also. Now you redo this question, you'll be having conceptually very level clarity. And try question number 5 before you listen. Even if you get the right answer, listen to the lecture because you will be having various different angle to solve the question. Sometimes your way of thinking and my way of thinking will be different. I know that you will be finding sometimes very quick answer rather than the roots which I am using. Sometimes I will be very smart than you. That exchange of knowledge is what the listening to the class is all about. Question number 5 is again a very easy question only. Try by your own before, sir, you listen to the next lecture. Sir, I am with you, sir, from your heart. Anybody is there? Where is a grand clap? Sir, very, very, very happy afternoon to all. So we are doing the book back of the ratio analysis, my dear lovable students. We are moving into question number 5. Yes, sir. Sir, we have already done 4 questions. Using the following information, prepare the balance sheet. We have to prepare the balance sheet. Long-term debt to net worth. So, long-term debt divided by net worth is equal to 0.5 divided by 1. That means if 1 rupees is a net worth, 50 paisa is a long-term debt. Right, sir? Total asset turnover ratio. You know what is the total asset turnover ratio? Sir, total asset turnover ratio is equal to sales divided by total asset. Correct? Right. Average collection period is equal to 18 days. Average collection period is equal to 18 days is equal to average accounts receivable divided by average credit sales per day. Correct, sir? Direct formula, sir. You are saying credit sales divided by debtors turnover ratio, indirect formula. That is also okay, fine. Or credit sales divided by debtors turnover ratio. 360? Yes, 365 days. That is credit sales divided by 365 divided by debtors turnover ratio, basically. 365 divided by debtors turnover ratio. Which is debtors turnover ratio is equal to credit sales divided by average accounts receivable. In question, they something said that assume how many days? So instead of 365, we can say how many days? Can I proceed, sir? Yes, sir. Inventory turnover ratio 9 times. Inventory turnover ratio is equal to cost of goods sold divided by average stock is equal to 9 times. Comfortable? GP margin how much percent? So GP margin is equal to 10% or cost of goods sold is equal to 90%. Comfortable? Acid test ratio. Acid test ratio is equal to quick ratio. is equal to quick asset divided by current liabilities is equal to 1 divided by 1. Are you really with me? Assume a 360 days and all sales are on what? Credit. There is no cash sale. Some figures has been given in the question. Notes and payable. Can I take this as current liability? Common stock and retained earnings. Can we call this as net worth? So basically net worth is equal to 2 lakh. Net worth is equal to what plus what? Common stock plus retained earnings. That is equal to 1 lakh plus 1 lakh comes to 2 lakhs. Are you all really with me? Yes, sir. Can I apply this figure here, sir? Long-term debt divided by net worth. So long-term debt divided by net worth is equal to 0.5 divided by 1 is equal to long-term debt divided by 2 lakhs. Clarity? Long-term debt is equal to 2 lakhs into 0.5 comes to 1 lakh is the long-term debt. Can I proceed? Able to appreciate? That's it, man. If you see, I got the long-term debt. If I add here how much lakh? 1 lakh. Then I will get the 4 lakh as the total liabilities and equity. If I drag here, my total asset is how much? Easy. So, total liabilities is equal to total asset is equal to comfortable. Now I can apply the second formula, which is nothing but total asset turnover ratio. Comfortable? So, total asset turnover ratio is equal to sales divided by total asset. That is equal to 2.5 divided by 1. That is equal to sales divided by 4 lakh is the total asset. Can I cross multiply? So sales is equal to 4 lakhs into 2.5 comes to 10 lakhs is the sales. Comfortable? Once I get the sales is equal to how much lakh? I can bifurcate the sales into GP at the rate of and cost of goods sold at the rate of 10 lakh into 90 percentage comes to and 10 lakh into 10 percentage comes to clarity. Now I am having cost of goods sold. Can I use the inventory turnover ratio? So inventory turnover ratio is equal to cost of goods sold divided by average stock. Are you all really with me? Yes, sir. Is any information regarding opening stock given in the question? So, can I take that average stock as closing stock? So, I have to take instead of average stock as closing stock. Enna clarity irka? What is the inventory turnover ratio time? 9 times is equal to 9 lakhs divided by closing stock. Clarity? My dear lovable students, 9 closing stock is equal to, that means what stock? Closing stock is equal to 9 lakhs divided by 9 comes to 1 lakh is the amount of closing stock. Can I fill inventory as 1 lakh? Yes, sir. Now, my dear lovable students, I am having acid test ratio, correct? I have used the long-term debt to net worth. I have used the total asset turnover ratio. Now I am having average collection period, correct? Average collection period is equal to, can we travel through direct route? Sir, is it possible to travel? Tell me. Average accounts receivable divided by average credit sales per day. Do you know the sales? Sales is equal to 10 lakh. Number of days is equal to 360. Specifically given in the question. That means average credit sales per day is equal to 10 lakhs divided by 360 comes to 2777.77 per day. Correct? So daily I am making 2777.77 per day. Comfortable? They said that average collection period is equal to 18 days. Is any opening receivable details available? No, sir. So can I take the closing receivable? Basically closing datas. Are you really with me? Divided by 2777.77 is the average credit sales per day. So can I cross multiply? That means, sir, closing receivable is equal to 2777.777777777777 at the end into 18. Are you really with me? So 2777.777777 calculator itself will say that stop the 7 into 18. You will be getting what? 50,000. Why I am asking you to put the 77 at the end? Otherwise, you will be getting 49,980, 680 and all. Don't do like that. Are you really with me? So can I call this, sir, my accounts receivable as 50,000? Yes, sir. So I have used average collection period also. I have used the inventory turnover ratio also. By that only, I have calculated the inventory, closing inventory. Now GP ratio I have done. Nothing to do with the GP ratio, right? To find out the cost of goods sold. Now the using ratio is the quick ratio, right, sir? Sir, quick ratio is equal to quick asset divided by current liabilities. Comfortable? It's what? 1. 1 than a quick ratio. So 1 divided by 1 is equal to current asset minus inventory minus prepaid expenses divided by current liabilities. Do you know how much current liability? How much lakh? Already given in the right. So 1 divided by 1 is equal to, do you know how much is the total current asset? No, sir. I only know the total asset. Correct? Total asset is how much lakh? So what asset? Current asset minus, do you know inventory? Yes, sir. How much? 1 lakh is the inventory. Correct? Assuming prepaid expense to be 0. It's not assumption. It is the fact. Because it is not there in the balance sheet given. They have not given that there is no what expenses? Prepaid expenses. So prepaid expenses to be 0. Divided by how much lakh? 1 lakh. Comfortable? Can I cross multiply? 1 lakh into 1 comes to 1 lakh. 1 into what asset? Current asset. So current asset minus 1 lakh. Are you really with me? That means minus 0. Leave it. So current asset minus 1 lakh is actually equal to 1 lakh is the equation you are getting. So current asset is equal to 1 lakh plus 1 lakh. Come to totally 2 lakhs is the total current asset. Correct? What is the total asset? 4 lakh. If the total asset is equal to how much lakh? 4 lakh. In that, current asset is equal to 2 lakh. That means fixed asset is also. So I can update that plant and equipment as 2 lakh. Comfortable? This should comprise of totally 2 lakh. Out of that 1,50,000 has been booked by these two people. Correct? So this will be 50,000, my dear lovable students. Comfortable? And here also total of 4 lakh. And here also total of 4 lakh. Actually, instead of liability side and asset side, they have ulta given the balance sheet just to confuse. Many students won't even realize that this is a balance sheet given with first asset side and then the liability side. Are you really with me? Are you really with me? That's answer, man. Sir, cash 50,000 have we got? Accounts receivable 50,000. Accounts receivable 50,000 have we got? Inventory 1 lakh. Plant and equipment 2 lakh. Total asset is 4 lakh. Sir, we have actually dragged from there only 4 lakh here. Actually, everything notes and payable given 1 lakh. Then, sir, common stock. Common stock means equity. Common stock means what? The another name for the equity share capital in financial management is a common stock. What stock? And retained earnings means retained earnings. If you add these two, you will get the net worth. Right? If the net worth is 1 rupee, 0.5 rupees is the long-term debt. That's why 2 lakh out of 0.5 come to 1 lakh. Are you really with me? That was the only missing figure. We have added that. We got total 4 lakh, dragged it to the total asset side. So we understood that total asset is 4 lakh. We appreciated to the total asset turnover ratio. We find out the sales with that 10 lakh. Bifurcate the sales into GP and cost of goods sold. Taken the cost of goods sold. Gone to the inventory turnover ratio. We have find out the closing stock. Are you really with me? Average credit, sir, period has been given in the question as how much days? 18 days. With that, we have used the sales divided by 360 days. We find out the average credit sales and we have totally find out the closing data. Are you really with me? And by applying the acid test ratio, we understood that 2 lakh rupees is the total current asset. Out of 4 lakh rupees, if 2 lakh rupees is the total current asset, remaining 2 lakh rupees will be the fixed asset. Are you really with me? That 2 lakh rupees having a bifurcation of accounts receivable already booked 50,000, inventory already booked 1 lakh, only the remaining balancing figure of cash 50,000. Comfortable? This is how they have done this working note. Sir, long-term debt is how much lakh? 1 lakh. Total assets are just the liability side total comes to 4 lakh. Sales and cost of goods sold, sales is 10 lakh and COGS is 9 lakh because 10% is the gross profit. Correct, sir? With regard to current asset, sir, inventory turnover ratio, you'll be having closing inventory of 1 lakh. And by using the average collection period, you will be having closing data of 50,000. By using the acid test ratio, you can take the cash as, sir, balancing figure as 50,000. Comfortable? And the plant and machinery, as I already know that total liability is equal to 4 lakh, total asset is also 4 lakh. I drag that. Then from that inventory, receivable and cash, if I reduce, put together comes to how much lakh? 2 lakh. Basically from the total asset, if I reduce the current asset, I will get the fixed asset of 2 lakh. I hope that you itself would have got the right answer for this question. Right, sir? Actually, nothing, no complication. If you are able to start getting the answer from this question, you can try question number 6 by your own. Are you really with me? Actually, once you start doing, you will get a flow. Regarding one information, which information is connected matters to solve the question. For example, long-term debt to net worth means net worth, if it is 1 rupee, 50 paise is the long-term debt. That's it. Total asset turnover ratio, sir, by putting the long-term debt, I am getting the total liability. That is equal to total asset. Then I can use this data. So after which one you have to use it? That you will never get once you listen to me. If you want to get, you have to keep the pen on the field. Are you all really with me? So just before close this one, how many of you got the right answer for question number 5? This many students got the right answer for question number 5. Fantastic. Number of hands are increasing. Sir, those who have got or not got, try once again this question. And before you listen to the next lecture of illustration number 6, my dear lovable students, try from your side and listen. Then you will be having lot of value addition. I am with you, sir, from your heart. Anybody is there? Where is a grand clap? Sir, very, very, very happy afternoon to all. Sir, following information has been provided from the books of Lakshmi Private Limited for the year ended 31st March 2023. Net working capital 4,80,000. Sir, what is the interpretation of net working capital? Net working capital is equal to current asset minus current liabilities. Current asset minus. So that is equal to 4,80,000. Right, sir? Yes, sir. Sir, bank overdraft, they are given that bank OD is equal to 80,000. Bank overdraft is 80,000. Let it be there. Fixed asset to proprietary ratio. Fixed asset divided by proprietary ratio, proprietary fund, correct? Is equal to 0.75 divided by 1. So if 1 rupees is the proprietary fund, 75 paise is the fixed asset. Comfortable? Reserves and surplus is a part and parcel of the proprietary fund. Reserves and surplus is equal to 3,20,000. 3,20,000. Right, sir? Current ratio 2.5. Wow. Current ratio is equal to current asset divided by current liabilities. That is equal to 2.5 divided by 1. That is, my dear lovable students, 2.5 minus 1 is equal to 1.5. Is equal to 1. What I am doing is, if the current asset is equal to 2.5, That's what they have expressed as current ratio, correct? Then the current liability should be equal to 1. If they simply say 2.5, it is 2.5 is to 1. That means current asset minus current liability is equal to working capital is equal to 1.5. Are you really with me? This is what they have given as 4,80,000. Are you really with me? Net working capital. If 1.5 is 4,80,000, we can easily calculate 2.5. We can easily calculate 1. That means if the net working capital is equal to 4,80,000, that will be equal to 1.5. Classified into how many category? 2 category. Number 1, current asset and current liabilities. Comfortable? Current asset, how you have to calculate? 4,80,000 divided by 1.5 into 2.5. Are you able to place it, sir? Comes to 8 lakhs is the total current asset. Sir, can you repeat once again what you said? Yes, I am repeating. Sir, in question they have given net working capital. Net working capital is 4,80,000. This net working capital is nothing but current asset minus current liabilities. Current asset divided by current liability only 2.5. This means divided by 1. So current asset minus current liability means I know that current asset is 2.5 and current liability is 1. So 2.5 minus 1, 1.5, only this figure. If 1.5 is 4,80,000, how much is the 2.5? 8 lakh. And current liability, which is nothing but net working capital divided by 1.5 into 1. Correct? Which is nothing but 4,80,000 divided by 1.5 into 1 comes to 3,20,000 is the what liability? That's it. I've break that figure. Liquid ratio, otherwise called as quick ratio, 1.5. So my dear lovable students, liquid ratio is equal to quick asset divided by current liabilities is equal to 1.5 divided by 1. Comfortable? I don't know how much is the quick asset. So quick asset divided by, but just now I find out 3,20,000 as the what liability? That should be equal to 1.5 divided by 1. Comfortable? So quick asset is equal to 3,20,000 into 1.5. Are you able to appreciate? So 3,20,000 into 1.5 comes to 4,80,000. Comfortable? Now I can have an analysis of my what asset? Current asset. My current asset comprises of quick asset and inventories and prepaid expenses. If no information has been given in the question, I will always assume that prepaid expense is 0. Prepaid expenses, because generally prepaid expense will not happen in a business organization. Correct? I will not pay expense in advance. I may have delay, but no business will voluntarily go and pay expense in advance. Right, sir? If there is such prepaid item, they have to open their mouth and say that, yes, there is a prepaid expenses. Otherwise, generally we will assume that prepaid expenses are 0. So, I know that my total current asset is how much lakh? 8 lakh. In my quick asset, just now I find out that 4,80,000. Am I right, sir? So, my inventory should be 8 lakh minus 4,80,000 comes to 3,20,000 should be my inventory. Comfortable? That data also I have used. You are required to prepare a summarized balance sheet as at 31st March 2023, assuming that there is no long-term debt. There is no long-term debt. There is no long-term debt. Because if you see the balance sheet, my dear lovable students, if you are assuming the balance sheet like this, you should have what asset? Fixed asset. Why I am saying like that is because they themselves have a data, fixed asset to proprietary ratio. So there is fixed asset in the concern. Correct? I don't know how much is the fixed asset. There is no information till now to find out the fixed asset. Comfortable? So my dear lovable students, sir, I should have what asset? Current asset. In that current asset, I have stock. Just now I find out that stock inventory is equal to 3,20,000. Comfortable? Actually, I can call this as other current asset because this may be debtors, this may be cash. Is there any information in the question to find out the debtor? No. Is there any information to find out cash? No. Are you really with me? Yes, sir. So, total current asset I know. How much? 8 lakhs. 8 lakh minus 3 lakh 20,000 comes to. So, I am treating this 4 lakh 80,000 as other current asset. Typically, technically, quick asset. Are you really with me? So, I should get the balance sheet asset side total. The same total should also be come for the what side? Liability side. I know I should be having current liability here. How much is the current liability? 3,20,000 is the current liability. Comfortable? Inside that current liability, I am having bank overdraft. Inside that current liability, I am having bank overdraft. That is already given in the question. So, one of the current liability is how much? 80,000. So, I can call this as other current liability, yeah, which can be creditor, I don't know, bills payable or rent payable, anything may be there, my dear lovable students. So, total 3,20,000 minus 80,000 comes to 2,40,000 should be the other current liability. Comfortable? Sir, I don't know the fixed asset. I know the total current asset and I don't know the total balance sheet. That total only should come here. But I know the total current liabilities. I am having here capital employed. Correct? Capital employed consists of capital and reserves and surplus. Are you really with me? But that reserves and surplus has been given in the question as 3,20,000 is the reserves and surplus, right? Actually, generally in any question, only one variable will be there to break. But in this question, it is not like that. It is nowhere. It's, sir, put together quickly matching. First one, net working capital. What is net working capital? Current asset minus current liabilities. I am going checking here, my dear lovable students. 320 plus 480. 8 lakhs. So, stock is 320. The other current asset is 4,80,000. Comes to how much? Calculator. 8 lakhs minus 240 plus 80. 3,20,000. 8 lakh minus 3,20,000 comes to. Is it exactly matching? Yes, sir. My first figure, net working capital, has been matched. Clarity? So, this bank overdraft is a part and parcel of the, that also I have done. Now, I am having only hope in the fixed asset to the proprietary ratio, right, sir? So, fixed asset divided by what ratio? Is equal to 0.75 divided by 1. Correct? So, when I cross multiply, fixed asset is equal to proprietary fund into 0.75. Correct? Or fixed asset is equal to 0.75 proprietary fund. 0.75. Are you really with me? Can I proceed, sir? So, here fixed asset is equal to 0.75 proprietary fund I got. Are you really with me? Now, I got the balance sheet total because 8 lakhs plus 0.75 proprietary fund. Because current asset total is how much lakh? 8 lakh. I understood that from the ratio. Look at here. Fixed asset to proprietary fund ratio means proprietary fund. Correct? So, fixed asset divided by proprietary fund is equal to 0.75 divided by 1. Can I proceed? That means 1 into fixed asset means cross multiply. Fixed asset is equal to proprietary fund in 0.75. Or rather, fixed asset is equal to 0.75 proprietary fund. Clarity, yeah? So, can I write here fixed asset is equal to 0.75 proprietary fund? That means, my dear lovable students, sir, I know that. Sir, one more data. Reserves and surplus 3,20,000. Have I taken? And they specifically said that there is no long-term debt. There is no what? So, here the long-term debt should be equal to 0. Long-term debt should be equal to, that means fixed asset is 0.75 proprietary fund plus current asset of how much lakh? 8 lakh will give me total asset. Minus what liability? Current liability should give the capital employed basically. Basically what fund? Proprietary fund. Correct? So with this information I am trying fixed asset, hello sir, plus current asset, that means total asset, minus current liabilities, hello sir, minus long-term debt, typically, technically it is 0 in this question, should be equal to the proprietary fund. Should be equal to the, this is the maximum formula we can take. Since question, they themselves given that current asset minus current liability is equal to net working capital. I can write that fixed asset plus net working capital minus long-term debt is equal to proprietary fund. Are you totally with me? Sir, I know fixed asset as sir 0.75 proprietary fund. Hello. Plus, I know net working capital 4,80,000 minus 0 is equal to proprietary fund. Technically, typically one proprietary fund. Are you really with me? That means, sir, I am taking this side. Come on. What is proprietary fund minus 0.75 proprietary fund is equal to 4,80,000. Both the sign got cancelled. Are you really with me? That means 0.25 proprietary fund is equal to 4,80,000. Are you able to picturize? Proprietary fund is equal to 4,80,000 divided by 0.25 comes to 19,20,000 is the total proprietary fund. Inside this we are having reserves and surplus already given in the question as 3,20,000. Comfortable? Sir, 19,20,000 minus 3,20,000 will be the equity share capital. Comes to how much lakh? 16 lakhs. Are you really with me? Now I can easily find out the fixed asset. Correct? Fixed asset is equal to proprietary fund into 75%. Correct? Am I right, sir? Which is 19,20,000 into 75% comes to 14,40,000 is the what asset. So I am replacing the balance sheet. Instead of I am writing 0.75 proprietary fund, I will be writing that 14,40,000. Now I know the total 14,40,000 plus how much lakh? 8 lakhs comes to 22,40,000 is the balance sheet total. Dragging the total here 22,40,000. Sir, minus sir current liability of 3,20,000. So 22,40,000 minus 3,20,000 comes to 19,20,000. Inside that reserves and surplus 3,20,000. So my total capital comes to my balance sheet got tallied. Are you really with me? Able to appreciate? Now I have not stopped. I have to recheck. Are you really with me? Answer done. Hello, sir. Net working capital 4,80,000. Sir, what is the current asset? 8 lakh. What is the current liability? 3,20,000. If I minus, am I getting 4,80,000? Yes, sir. Bank overdraft. Bank what? It is a working capital loan. It's a working capital is for short term. Are you really with me? Any short term loan will be a current liability. Are you really with me? So have I included that 80,000 in the bank overdraft inside current liability? Fantastic, to the core. Fixed asset to proprietary ratio, right? So if the proprietary ratio is 1, fixed asset will be 75%, right? So 16 lakhs plus 3,20,000 comes to, calculator, 19,20,000 into 75% comes to 14,40,000. Yes, I am matching with that data also. Are you really with me? Reserves and surplus 3,20,000. It is part and parcel of the balance sheet. Capital employed. Are you really with me? Or the proprietary fund. Can I proceed, sir? Current ratio 2:5. That is a starting point. Because current ratio is equal to current asset divided by. That means 2.5 divided by. Sir, from that only 2.5 minus 1 is equal to 1.5. This is the net working. By using that only, I have break the current asset and I have break the current liability. Comfortable? Sir, liquid ratio help me to find out the inventory part. Are you really with me? Because current asset minus inventory minus prepaid expenses will be the quick asset. Are you really with me? And in this question, they were having a superb hint saying that there is no what term debt. Only we are having short term debt, which is nothing but current liability that we can break from the current ratio itself. So this is the balance sheet. They have given fixed asset is 14,40,000. Have we got? Inventory 3,20,000. Have we got? Inventory means stock, right, sir? Other current asset they have named as 4,80,000. Total 22,40,000. Here also 22,40,000, right? Bank overdraft is form part of the what liability? Current liabilities. Hello, sir. And there are one more item should be there, no? Other what liabilities? Current liabilities. Otherwise, balance sheet should not tally. Correct? Other current liabilities, how much? 2,40,000. Are you all really with me? Yes, sir. And you are having reserves and surplus already given in the, and 16 lakhs is the capital, my dear lovable students, 22 lakh 40. Look at here, working note. They have calculated by using the current ratio. They calculated net working capital 3,20,000 already given in the, from that the reverse work to current asset 8 lakhs. Are you comfortable? By using the liquidity ratio, they have taken 3,20,000 rupees as the inventory. Are you comfortable? Yes, sir. Sir, proprietary fund. They also derived fixed asset is equal to proprietary fund into 75%. Hello, sir. That means proprietary fund, sir, fixed asset. You picturize the balance sheet. Fixed asset. Are you picturizing? Plus net working capital. That means plus current asset minus long-term debt will give you proprietary fund, basically capital, correct? So, we know fixed asset, sir, which is 0.75 of the what fund? Proprietary fund. Plus how much? 4,80,000, which is nothing but net working capital. Minus long-term debt is what? 0. You will get 19,20,000 rupees as the proprietary fund. This into 75% will be the 14,40,000 as what asset? Fixed asset. Inside this 19,20,000, you are having a reserves and surplus of 3,20,000. So 16 lakhs will be the capital. Are you really with me? And they are calling this as sundry creditors 2,40,000. You can call it as other current liability, or even you can call it as sundry creditors also, because balance sheet demo format has not been given in the question. So I cannot exactly say that whether it is sundry creditors or not. Are you comfortable? Very good, very good. Good question. Sir, if you try by your own, sometimes you may stuck, because multiple variables have not been given in the question. If you tried and listened to this lecture, that mental blockage would have opened. Okay, fine. This is where I have stand for very long time, and this man is traveling like anything. Hello, sir. Otherwise, you will be feeling normal question only. No break, because only for me bell and break is there. Otherwise, you will be feeling so much comfortable with the explanation, because with God's grace, I used to explain very well. Sir, then what you are supposed to do is, you have to redo question number 6. Hello, sir. And you have to try question number 7 before you see the lecture of question number 7. Are you really with me? Sir, I am getting the answer for ratio analysis. I am able to proceed with the ratio analysis, sir. I am with you, sir, from your heart. Anybody is there? Where is a grand clap? Sir, very, very, very happy afternoon to all. So we are doing the book back question of the ratio analysis. We are in question number 7. M Private Limited gives you the following information relating to the year ended 31st March 2023. Current ratio has been given as 2.5:1. As we all know that, current ratio is equal to current asset divided by current liability, which is equal to 2.5 divided by 1. First, they have given various ratios. Number 2 is debt equity ratio 1:1.5. So, debt equity ratio is equal to 1 divided by 1.5 is equal to debt divided by equity. Are you all really with me? The next one, return on total asset. Specifically, they are mentioning that it is after tax 15%. So, PAT. So, return on total asset is equal to PAT divided by total asset is equal to 15 divided by 100. 15%. They have given total asset turnover ratio. Sir, total asset turnover ratio is equal to sales divided by total asset is equal to 2 by 1. Correct, sir? GP ratio 20%. Fine, fantastic to the core. So, GP ratio is equal to 20%. So, automatically cost of goods sold is equal to, always sales will be equal to, we can bifurcate that at the appropriate time. They have given stock turnover ratio. Stock turnover ratio is equal to cost of goods sold divided by average stock is equal to 7 times. Right, sir? 7 times. Correct? Okay, sir. 7 by 1. Net working capital. This is my starting point. I can use the net working capital to bifurcate the current asset and current liabilities. Right, sir? Sir, they have given that net working capital is equal to 13,50,000. Comfortable? My dear lovable students, current asset minus current liabilities is equal to 2.5 minus 1 is equal to 1.5. Correct? Which is equal to 13,50,000. With this, we can bifurcate or classify into current asset and current liabilities. Comfortable? So the current asset will be 13,50,000, that is equal to 1.5 into 2.5. Last day itself we have studied this shortcut, correct? So 13,50,000 divided by 1.5 into 2.5 comes to 22,50,000 is the current asset. Can I proceed, sir? Coming to the what liability? Current liability, which is nothing but 13,50,000 divided by 1.5 into 1. So 13,50,000 divided by 1.5 comes to is the current liabilities. Comfortable? Okay, man. This is what the first data we can use. I am having the second one. I am writing this formula here since space constraint. Second one, debt equity ratio is equal to debt divided by equity. That is equal to 1 divided by 1.5. Okay, I have used the 13,50,000. Brilliant. This is the superb information given in the question as fixed asset. Once I am having fixed asset, I find out the current asset, I will get the total asset. Then for me, total asset turnover ratio will work. Right, sir? If you see the balance sheet, man, balance sheet will be like this, sir. I will be having fixed asset, which is given as 30 lakhs. 30 lakhs is the fixed asset. And I am having current asset, sir. Current asset just now I find out as 22,50,000. 22,50,000. Correct, sir? So 52,50,000 is the total asset. Are you really with me? Here also it should be 52,50,000. Sir, I can apply in the total asset turnover ratio. Sir, sales divided by, I don't know sales. Just now I completed the 52,50,000 is equal to 2 by 1. So sales is equal to 52,50,000 into 2. Are you getting it? Comes to 1 crore is the sales. 1 crore 5 lakhs is the sale. If I understand 1 crore 5 lakh rupees is the sale, I can classify. Correct? Sales classified into two categories. GP ratio at the rate of 20% and cost of goods sold at the rate of 80%. Right, sir? Sir, 1 crore 5 lakhs is the sales. So 1 crore 5 lakhs into 20% comes to 21 lakhs is the gross profit. Can I proceed? Sir, 1 crore 5 lakhs minus 21 lakhs comes to 84 lakhs is the cost of goods sold. Right, sir? Since I am having cost of goods sold, I can move into the stock turnover ratio. Right, sir? Basically, 7 is equal to 84 lakhs divided by average stock. Are you really with me? In question, they have separately given the opening stock. So, I will still proceed with the average stock itself. Comfortable? So, my dear lovable students, I can cross multiply. 7 average stock is equal to 84 lakhs. Clarity? Average stock is equal to 84 lakhs divided by 7 comes to 12 lakhs is the average stock. Are you really with me? I am continuing here, sir. Average stock is equal to opening stock plus closing stock divided by 2. This is equal to 12 lakhs. Are you really with me? That means, my dear lovable students, sir, opening stock plus closing stock is equal to 12 lakhs into 2 comes to 24 lakh. Are you really with me? That means if opening stock and closing stock is equal to 24 lakh, they themselves given what stock? Opening stock as 11,40,000. Are you really with me? Then 24 lakh minus 11,40,000 comes to 12 lakh 60,000 is the what stock? Closing stock. Are you really with me? This is a part and parcel of the total current asset. So total current asset will be bifurcated into stock, closing stock and other than closing stock. And maybe other information may be also there. I will be taking at the appropriate time. Comfortable? So what and all ratios? Sir, current ratio I have taken care. Current asset I have taken care. Current liability I have taken care. Till now, there is no specific information regarding the debt. Correct? But for here, I am having equity. Correct? Generally, 1,80,000 equity shares of rupees 10 each and 60,000 9% preference shares of 10 each. Correct? If I add both, generally I should get equity in FM. If I add both, generally I should get equity in FM. Because in financial management, equity means equity shareholders money plus preference shareholders money. Right, sir? So, my dear lovable students, I have used all the data. Even fixed asset also I have used. Even opening stock also I have used. The only pending data is the equity. I am proceeding with the equity. Be with me. So, my dear lovable students, equity is equal to, sir, 1,80,000 into 10. 1,80,000 into 10 comes to 80 lakhs. Actually, this is the equity share capital. Correct? Add preference. Add preference. Right, sir? 60,000 into 10 comes to 60,000 into 10 comes to. So, total comes to 24 lakhs is the equity. 24 lakhs is the equity. Correct? I am having debt equity ratio. I am having what? My dear lovable students, sir, debt divided by, I don't know what is the debt. There is no information is available regarding debt. So I have to keep debt as balancing figure. Are you really with me? Divided by equity, I just now find out that 24 lakhs is equal to 1 divided by 1.5. Correct, sir? So 1.5 debt is equal to 24 lakhs. So debt is equal to 24 lakhs divided by 1.5 comes to 16 lakhs should be the debt. 16 lakhs should be the debt. Are you really with me? My dear lovable students, now I can apply return on total asset. Correct? Which is nothing but PAT. Is there any way to find out PAT? No. Do you know total asset? Yes, sir. How much? 52 lakh 50,000 is equal to 15 divided by 100. Are you really with me? That means, sir, PAT is equal to PAT 100 PAT is equal to 52 lakh 50,000 into 15. Right? So PAT is equal to 52 lakh 50,000 into 15 divided by 100 comes to 7 lakh 27,000. 87,000. 7 lakh 87,500 is the PAT, profit after tax. Are you really with me? I'm looking back to the question. Current ratio they have given. From this, I can take current assets and current liability. I have taken. What is the current asset? 22 lakh 50,000. What is the current liability? 9 lakhs is the current liability. Comfortable? Sir, I need debt. What is the debt I got? 16 lakhs as the debt. What is the equity we calculated? 24 lakhs. Comfortable? Return on total asset means we just now said that PAT, profit after tax, comes to 7 lakh 87,500. Comfortable? Total assets, we calculated total asset as 52 lakh 50,000 and sales is equal to 1 crore 5 lakhs. Sir, we have bifurcated the sales GP ratio. What is the GP? 21 lakhs as the GP. Automatically, cost of goods sold will be 84 lakhs. Are you understanding? And the closing stock is equal to how much? 12 lakh 60,000 is the closing stock. Right, sir? Net working capital is given in the question. Fixed asset is given in the question. Equity is actually given in the question. and opening stock is given in the question, right sir? Now you are required to calculate the what ratio, quick ratio, fixed asset turnover ratio, proprietary ratio and the EPS. Proprietary ratio and the EPS, earnings per share. My dear lovable students, if I am putting or pasting all the data into a trading account, I will be getting as by sales. Am I right, sir? What is the sales? I find out 1 crore 5 lakhs. 1 crore. I will be having to opening stock and buy closing stock. Surely I don't have any problem. Hello, sir. Basically, by closing stock, I have calculated as 12 lakh 60,000 is the closing stock. Sir, this has not been given in the question. But that's what my job is all about. Sir, what is asked in the question, I don't want. I will be doing something extra. Sir, to what stock, man? Opening stock given as 11 lakh 40,000 as the opening stock. So, I can put gross profit at the rate of 20% on sales comes to 21 lakhs. Comfortable, sir? So, I know that, sir, I will be having the purchases, correct? I can take the purchases as the balancing figure. Are you really with me? Because opening stock plus purchases, I will be getting subtotal minus closing stock will be cost of goods sold. I know the cost of goods sold, right? What is the cost of goods sold? 84 lakhs is the cost of goods sold. What is the closing stock? 12 lakh 60,000. So, from some amount, if I am reducing 12 lakh 60, I am getting 84 lakh, right? So, 84 lakh plus 12 lakh 60 comes to 96 lakh 60,000. Are you really with me? Then the opening stock they have given as 11 lakh 40,000, right? Yes, sir. So, 96 lakh 60,000 minus 11 lakh 40,000 comes to 85 lakh 20,000 is the purchases. Are you really with me? So, I will be getting here the total of the trading account. I am least concerned about it. I am putting by gross profit brought down. Are you really with me? Which comes to how much lakh? 21 lakhs. Which comes to, I will be getting net profit, which is nothing but we already calculated by using the return on total asset, which comes to 7 lakh 87,000. Is there any debt in the balance sheet? Is there any debt in the balance sheet? No, sir. There is no debt. That means nothing will be there. To indirect expenses. Is there any debt? Yes, sir. We find out the debt. For that, any percentage has been given. KD has not been given. Are you really with me? So, I can't allocate any interest. Are you really with me? So, automatically, this side, it will be 21 lakhs. And here, 21 lakhs minus 7 lakh 87,500 comes to 13 lakh 12,500 is the, are you really with me? Now I am having the balance sheet, my dear lovable students. I am having fixed asset and current asset, correct? Fixed asset already given in the question as 30 lakh. Total current asset I calculated as 22 lakh. Current asset total 22 lakh 50,000. Total comes to 52 lakh 50,000. Are you really with me? Inside this current asset, I am having split. One is stock and the other current asset. Correct? What is the stock? Closing stock. 12 lakh 60,000. So 22 lakh 50,000 minus 12 lakh 60,000 comes to 9 lakh 90,000 is the other current asset. Comfortable? Yes, sir. Now I am having current liability, which is given in the question. We find out. Comes to how much? 9 lakhs. So here also it should be 52 lakh 50,000 and current liability should be 9 lakhs. Right? And we are having debt. By using the debt equity ratio, we find out debt as 16 lakhs as debt. Then you are having equity share capital comes to 18 lakhs. 18 lakhs. Preference share capital as 6 lakhs. Are you really with me? Yes, sir. Take your calculator, man. 18 lakhs plus 6 lakh plus 16 lakhs plus 9 lakhs comes to 49 lakhs. There is a difference of, sir, 3,50,000. Is it matching? No, sir. Balance sheet is not tallying. That means what I worked is not correct. Are you really with me? Are you really with me? After I check this only, I will move into the calculation of the requirement in the question. Sir, I can add one thing is, my dear lovable students, the net profit available is 7,87,500. Right? What is the preference share capital? 6 lakh. What is the amount of, sir, preference dividend? 9%. Right, sir? So 6 lakh into 9%, it is only 54,000. It is only, it's not 3,50,000 rupees, but I am having a difference of 3,50,000. Right? So if I proceed like this, my dear lovable students, my balance sheet is not getting tallied. So the one way where, sir, ICI would have taken difference is, they can never go wrong in current ratio. Correct, sir? Because if net working capital is 13,50,000, current asset and current liability should be the same what we got, right? So just, I'm looking to the answer for the current asset and current liability, one by one knock. And what is the difference between what I done and what ICI done? Computation of current asset and current liability and the total asset, right, sir? Current asset, if it is 2.5, current liability is 1, then net working capital will be 1.5. Is it matching? Hence, the current asset will be 22,50,000, matching, and current liability will be 9 lakhs, matching. Total asset will be fixed asset plus the current asset, come to 52,50,000. Is it matching? That means there is no problem with the current ratio, current asset, current liability. Perfect. Now, computation of sales and cost of goods sold is what the discussion, right, sir? We got the sales as 1 crore 5 lakh. Even they also got the sales as 1 crore 5 lakh. Is there any problem? Sir, cost of goods sold as 84 lakh. Even we got the cost of goods sold as 84 lakh. So there is no difference in that. Comfortable? Sir, we got the average stock as 12 lakh. Even they also got the average stock as 12 lakhs. Comfortable? Sir, we got the closing stock as 12 lakh 60,000. Even they also got 12 lakh 60,000. Right, sir? And from the current asset, if you reduce the closing stock and prepaid expenses, technically, you will be getting the quick asset. Right? We have not calculated the quick asset till now because we were checking the genuinity of the answer what we have find out. Without that, if I calculate the answer, my answer will automatically get wrong. Are you really with me? Yes, sir. So, if we do, also we will be getting 9,90,000 because our current asset and their current asset are matching. Our closing stock and their closing stock are matching. Then automatically quick asset should match. It is not a rocket science. Are you really with me? Then, my dear lovable students, computation of the proprietary fund. Computation of the, they are saying that, my dear lovable students, debt equity ratio is equal to debt by equity, which is 1 divided by 1.5. There is no doubt. They have cross multiplied that and they are saying that equity is equal to 1.5% of debt. Equity is equal to 1.5 of debt. Till now, no problem. Are you really with me? Sir, total asset is equal to, which is nothing but, man, if you see here, look at here. Here it is fixed asset and current asset. That's what asset? Total asset. Here, equity plus preference share capital plus debt plus current liability, because all the four will only comprise the liability side of the balance sheet. All this put together should be 52,50,000. Should be 52 lakh. Enapa clarity? Are you really with me? That means what they are saying is total asset is equal to total liability. Accepting? Which is fixed asset plus current asset should be equal to equity share capital plus preference share capital plus debt plus current liabilities. Because this plus this put together we got answer as 52,50,000. Right? And just now I understand that debt equity ratio is equal to debt by equity, which is equal to 1 divided by 1.5. So equity is equal to debt into 1.5, or rather 1.5 debt. Are you really with me? So can I write equity as 1.5 data? Sir, equity plus preference share capital. Hello, sir. Plus debt. Hello, sir. Plus current liability, you know, comes so much. 9 lakhs. This is how we have to post it. Correct? What they have done is 1.5 debt. 1.5. Okay. That they have taken as equity. Correct? Plus 6 lakh. What is the 6 lakh? Preference share capital. Hello, sir. Plus debt, because we don't know what is the debt. Plus 9 lakh. What is 9 lakh? Current liabilities. Are you really with me? That means, my dear lovable students, sir, here you are having 1.5 debt and you are having 1 debt here. Correct? Can you add it? It will become, so 52 lakh 50,000 is equal to 2.5 debt plus how much lakh? 6 lakh. How 6 lakh? Preference share capital 6 lakh plus 9 lakh. We can actually club it. Here itself, instead of writing preference shares, I am writing 6 lakh. Then things will be very easy. Are you able to appreciate? Then, my dear lovable students, 2.5 debt plus I can add 9 plus 6 lakhs comes to. Sir, are you all really with me? That means 2.5 debt is equal to 15 lakh minus 52 lakh 50,000. Right? 52 lakh. 52 lakh 50,000 minus 15 lakhs. Enapa clarity? Sir, 2.5 debt is equal to 37 lakh. So, debt is equal to 37 lakh 50,000 divided by 2.5 comes to 15 lakhs is the debt. Enapa? We got the debt as 16 lakhs. Hello, sir. But they got the debt as only as 15 lakhs. They got the debt only as 15 lakhs. Right? Sir, now if the debt changes, automatically equity changes. Because debt into 1.5 times only equity. Correct? So 15 lakhs into 1.5 comes to 22 lakh 50,000. 22 lakh. And they are having proprietary fund of, sir, equity plus preference comes to 28 lakh 50,000. 28 lakh. So, have you all understood how I calculate the debt? How I calculate the equity? What we have done is, hello sir, we have applied the debt equity ratio. This is what our calculation of debt. Here. This is what our calculation of debt. Debt divided by equity is equal to 1 divided by 1.5. So, debt divided by 24 lakh is equal to 1 divided by 1.5. Correct? That means 1.5 debt is equal to 24 lakh. So, debt is equal to 24 lakhs divided by 1.5 should be how much? 16 lakhs. 16 lakhs. Hello, sir. My dear lovable students, look at the difference what we have done and what ICI has done. Sir, clearly understand what here they are saying. Total asset is equal to total liability. Correct, sir? Total asset is equal to. Look at, picturize this one. Picturize this one. And you tell and understand where you gone wrong. Here it will be fixed asset and here it will be current asset. You will get the total asset. Pakka? Question specifically saying that they are having equity share capital. Question specifically saying that they are having preference share capital. Question specifically said that you are having debt. You are having debt. Correct? Otherwise, debt equity ratio, no need to give in the question. Correct. Question specifically saying that you are having what liability? Current liability. If that is the case, my dear lovable students, the balance sheet what side total? Asset side total of 52 lakh 50,000 should match here also. Correct? Correct? That means if I add equity plus preference plus debt plus current liability, I should get a total of 52 lakh 50,000. Pakka? That's what they tried. So they are saying that yes, the total should be fixed asset plus current asset means balance sheet asset side total should be equal to equity plus debt plus current liability. Comfortable? That means 52,50,000 should be equal to equity. I can represent the equity in different form that if the debt is 1 rupee, 1.5 rupees will be the equity. If the debt is 1 rupee, 1.5 rupees will be the equity. So 1.5 debt, hello sir, plus preference share capital. Plus what capital? Plus debt plus current liabilities should be equal to 52,50,000. Yes sir. If that is the case, 52,50,000 total asset is equal to 1.5D plus 1D comes to 2.5D should be equal to 6 plus 9 lakh 15 lakhs. Clarity? That means 2.5D is equal to 52,50,000 minus 15 lakhs comes to, sir, total debt is equal to 15 lakh. I am saying that if the debt is how much lakh? 15 lakh into 1.5 times should be the equity. So 15 into 1.5 comes to 22,50,000 will be the equity, right? What is the preference share capital? 6 lakhs already given in the question, correct? Are you really with me? You look at the balance sheet, my dear lovable students. What is the number of equity share available? 1,80,000. Are you really with me? 1,80,000 into how much percentage? Sorry, how much value? 10 rupees comes to how much? 18 lakh. But equity is showing 22,50,000 now. Are you really with me? So 18 lakhs is given in the calculator. Plus 7,87,500 is the net profit you have derived. Correct? Sir, we got 18 lakhs as NSR equity. Our equity is equal to 18 lakhs. But the answer equity is equal to 22.5 lakhs. Are you really with me? So 22,50,000 minus 18 lakhs comes to, there is a increase of 4,50,000. Ennappa? What is the PAT given in the question? 7,87,500. Correct? From this profit after tax, they would have paid preference dividend. Are you really with me? I know that preference dividend will be 45,000 rupees, 54,000 rupees. So if I reduce 54,000, which is 7,87,500 minus 54,000 comes to 7,33,500. Are you really with me? But I am having reserves and surplus of only how much? 4,50,000 extra. But I am still having total amount in my hand of 7,33,500. Ennappa? So 7,33,500 minus 4,50,000 comes to 2,83,500 is the equity dividend the company has issued during the year. Are you all really with me? So if this much equity dividend has been issued, hello sir, automatically the reserves and surplus will come down. Automatically the cash balance will come down. The remaining cash will only be there with the company. Are you able to appreciate? So inside this equity share capital, actually 18 lakh rupees of share capital is there and 4.5 lakhs of reserves and surplus is there. That reserves and surplus is after payment of preference dividend and the equity dividend. But that and all they have not asked. Are you really with me? Are you really with me? So my dear lovable students, if we worked out, we have calculated 16 lakhs. Correct? But if we tally the balance sheet, it will be 50 lakhs. Sir, how I will know that in which route I have to go in exam? Because I also calculated the same way you calculated. Anybody is there? In the same route, sir, you have calculated. Yes. That's why I checked the balance sheet. That's why I checked I have not started writing the answer till now. What I am, sir, checking whether my answers are what or not, correct or not. You also have to check. You also have to check. Sir, are you saying that I have to put P&L account and balance sheet? No. At least put balance sheet. At least put what? No need to write P&L account and waste your time that by sales, by all this stuff and all. Don't need. No need to find out the purchases. Then why are you doing that much? Because I am not teaching this question. I am teaching the subject. For that purpose, I am trying to giving analysis as much as possible. If you are having extra analysis, you say to me, I will be happy. Are you really with me? I just want to make you think, not to get the answer. If that is the case, printed answers are available in the ICA. Go and see. Already there, man. Zero time waste. Go there. See, you will not understand anything. Come back. Come to me. I'll teach you. Don't worry at all. So at least try to do the balance sheet. Now I understood that somewhere I gone wrong. Correct? Because my balance sheet is not tallying. Now I understood that, okay, current asset I will never go wrong. Total asset I will never go wrong. The only place where I can go wrong is the debt. Are you really with me? So I have calculated, because what is the problem? Because my balance sheet does not give the total. Here I am having difference. If I am taking equity as 18 lakh and preference share capital as 6 lakh. Hello sir, let me ask you a question. Equity share capital, how many equity shares are there in the company? Into 10 comes to 18 lakhs. Have you done the operations during the year? Not done the operation. Done the operation. That's why you are having sale. That way you are having sales. Correct? After sales of how much lakh? 1 crore 5 lakh. If there is no retained earnings with you, for what purpose you are conducting the business? Logic? That means our equity is wrong. Our equity comprises of only equity share capital. We avoided reserves and surplus. That means you avoided P&L account. That means you avoided P&L account. Are you really with me? That's the mistake we have done. But ICA is saying that, oh, if that is the case, means this equity share capital is only a part of the, sir, equity shareholders fund. Equity shareholders fund. Sir, how you have to understand? Because this total should match with all the 4 elements total. If that is the case, equity should be how much lakhs, man? Equity should be, the total equity should be 18 lakhs plus 4.5 lakhs comes to 22 lakh 50,000. Are you able to appreciate or understand? Are you really with me? Sir, if the debt is 15 lakh, it's 1.5 times will be the equity. Debt is 15 lakhs, it's 1.5 times will be the what? Equity. Now you tell me, man, current liability already given. How much? 9 lakhs. Take your calculator, sir. 18 lakhs plus 4 lakh 50,000 plus 6 lakhs plus 15 lakhs plus 9 lakhs comes to 52 lakh 50,000. Exactly matching with the balance sheet. Are you really with me what I am talking to you? Now my fixed asset already given. No rocket science. Comes to 30 lakhs. Current asset 22 lakh 50,000. Are you really with me? Perfect, sir. Now I confirmed that my figures are correct. Now I can work out whatever they want. What ratio, man? Quick ratio. So quick ratio is equal to quick asset divided by current liability, or current asset minus inventory divided by current liabilities. Comfortable? Tuck, tuck. What is the total current asset? 22 lakh 50,000 minus inventory. 12 lakh 60,000 divided by current liability. 9 lakhs. What is the numerator? 9 lakh 90,000 divided by 9 lakh is equal to 1.1 is the what ratio? Quick ratio. Look at the answer. 1.1 is the quick ratio. Are you really with me? Yes, sir. What is the second requirement of the question? Fixed asset turnover ratio. The second one is fixed asset turnover ratio is equal to sales divided by fixed asset. What is the sale? 1 crore 5 lakhs divided by fixed asset 30 lakhs comes to 3.5 times is the fixed asset turnover ratio. Comfortable, sir? That's what 3.5 times. What is the third requirement in the question? Proprietary ratio, right, sir? Proprietary ratio is equal to proprietary fund divided by total asset. Proprietary fund is equal to equity plus reserves and surplus plus preference divided by total asset. Sir, I am writing in bifurcation to make you understand, right? Equity already given in the question as 18 lakh plus 4 lakh 50,000 should be my reserves and surplus, and preference 6 lakh already given in the divided by total asset is 52 lakh 50,000. Technically 18 lakh plus 4 lakh 50,000 plus 6 lakhs comes to 28 lakh 50,000 divided by 52 lakh 50,000 comes to 0.54 is the what ratio? That means out of 1 rupees of total asset, 54 paise of total asset is owned by the owner. The remaining balance is owned by the debtor. Are you really with me? Are you really with me? The third requirement or the fourth requirement is the EPS, which is nothing but residual earnings divided by number of equity shares. Are you really with me? I am having the PAT, man, profit after tax. Are you really with me? PAT is equal to 7,87,500. Comfortable? Less what dividend? Preference dividend. How much? 54,000 is the preference dividend. Right, sir? I will be getting residual earnings of 7,33,000 divided by number of equity shares. Are you really with me? 1,80,000 equity shares are there. Then you are having earnings per share of 4.075 per share is the EPS, earnings per share 4.075. All the working notes I have done, my dear lovable students. Are you able to appreciate or understand? Hello, sir. So before you proceed to the answer checking, you have to check tally whether the balance sheet or tallying or not. Comfortable? Sir, why I am taking this much time to explain this one question? Because someone would have gone wrong. And you will not know where I gone wrong, why I gone wrong. Hello, sir? I don't want the answer. I want the reason. Are you really with me? So, think of it and ensure, and before you start doing the answers, cross-check that whether the figures are matching with the question or not. If it is not, we have some way gone wrong. Try to analyze where is the chance of going wrong. Don't say that ICA is wrong. ICA is not wrong. ICA is only correct. Are you really with me? If we proceed with our figures, even balance sheet has not been tallied. That means our answer is wrong. They are tallying the balance sheet. That means actually reserves and surplus is the balancing figure in the question. Reserves and surplus is the, that 4,50,000 reserves and surplus is the key. Correct? That 4,50,000 reserves and surplus, if we are able to appreciate, that's it. We parked even the reserves and surplus also under the debt category. We parked even the reserves and surplus also under the debt category. This is how we draw the balance sheet, which is nothing but fixed asset and current asset. And we have written it as equity share capital, preference share capital, and debt and the current liability. But ICA is saying that no. Sir, this should be fixed asset and current asset. Sorry, man. Fixed asset and current asset. Are you really with me? Here it should be equity share capital and reserves and surplus. Because during the year sales has happened and net profit has been given in the question. So you have to park that net profit. If you are still taking 18 lakh, what you have done with that net profit? Have you put it on dustbin? No. Big question arises, right? And you are having preference share capital that we given. Sir, we have played with the debt and we have current liability. What we have done in even the reserves and surplus, we parked under the debt. So debt has shoot up. That's why from 15 lakh, it has shoot up to 16 lakhs. Are you really with me? That's why we got the answer as 16 lakh as debt. ICA is saying that no. That is only one element. This should be what? 15 lakh. This plus this into 1.5 times will be the equity plus the reserves and surplus, which comes to 22,50,000. Plus the preference share capital of 6 lakhs plus the current liability of total comes to 52,50,000. Here anyway 52,50,000 you have tallied. That's the question is all about. I am with you from your heart. Anybody? Sir, where is a grand clap? Those who have tried and listening to this lecture will be feeling Devame. Hello, sir. For others, why are you explaining this much time? The same point I understood. Fine, fantastic to the core. Sir, try question number 8, my dear lovable students. Jig Jigajan Limited has furnished the following information before we check that tomorrow's NSR class. And I'm waiting for you to check and go right in this question. Are you all really with me? Sir, very happy afternoon to all. Sir, we are doing the book back of the ratio analysis. We are going to do question number 8. Sir, JIG Limited has furnished the following information relating to the year ended 31st March 2022. and 31st March 2023. 2 years data has been given. This is 31st March 2022 and this is 31st March 2023. Basically, we can take this as opening and this can be taken as closing. Correct? Opening, I was having a share capital of 40 lakh. Closing also, I am having a share capital of 40 lakh. So, there is no movement in the share capital. Whereas reserves and surplus, opening 20 lakh and closing 25 lakh. So, there is an increase of how much lakh? 5 lakh. If nothing has been given regarding the reserves and surplus, I will treat this as P&L account. Profit and loss account. Generally, reserves and surplus does not only mean the P&L, but also the capital reserve, etc., etc., etc. Are you really with me? Long-term loan, 30 lakhs under 30 lakhs. Additional information, net profit ratio, 8%. Net profit ratio, 8%. So, I can find out the net profit from this data. Net profit is equal to what? Minus what? Closing P&L account balance minus opening P&L account balance. Correct? So, net profit is equal to closing P&L account minus opening P&L account. Are you all really with me? Which is nothing but, sir, 25 lakh minus 20 lakh. Are you all really with me? So, 25 lakh minus 20 lakhs comes to 5 lakh. This should be 8%. This should be, because they are saying that net profit ratio is how much percent? So, net profit ratio is equal to net profit divided by sales into 100. Are you all really with me? That is equal to 5 lakhs divided by sales into 100. Correct? So, what is the net profit ratio? 8. So, 8 divided by 100 is equal to 5 lakh divided by sales. So, 8 sales is equal to 5 lakhs into 100. Are you comfortable? That means sales is equal to 5 lakhs into 100 divided by 8. Comfortable? So, 5 lakhs into 100 divided by 8 comes to 62 lakh 50,000 is what the sales. I hope that you would have all got sales as 62 lakh 50,000. Long-term loan, there is no change in long-term loan. 30 lakhs has become 30 lakh. And they have not specifically mentioned what is the interest rate for the long-term loan. Fine. GP ratio 20%. Fantastic to the core. Once I have the sales with me, I can bifurcate the sales into GP and the cost of goods sold. Correct? So, sales is equal to 62 lakh 50,000. Comfortable, sir? Classified into how many category? 2 category. Number 1, gross profit and cost of goods sold. Are you really with me? Sir, gross profit at the rate of 20%. Up 62 lakh 50,000 into 20% comes to 12 lakh 50,000. Are you really with me? Then my cost of goods sold at the rate of 80%. Can I proceed, sir? So, 62 lakh 50,000 into 80% comes to 50 lakhs is the cost of goods sold. Are you all really with me? Long-term loan has been used to finance 40% of the what asset? Fixed asset. My dear lovable students, they are indirectly saying a ratio that long-term loan divided by fixed asset is equal to 40 divided by 100. Divided by 40 divided by, that means what is the understanding of that? If 1 rupees is the fixed asset, 40% is the what? Long term. Is long term loan given in the question? How much lakh? With that, can I work out the fixed asset? Sir, generally I will be having a doubt that whether I have to take the opening long term loan or closing long term loan. Since both the figures are one and the same, hello sir, I can take either opening or closing. Here there is no such a question arises in this question, right? So my dear lovable students, 30 lakh. So 30 lakhs divided by fixed asset is equal to 40 divided by 100. Comfortable? That means 40 fixed asset is equal to 30 lakhs into 100. Are you really with me? So fixed asset is equal to 30 lakhs into 100 divided by 40. Hello, sir. So 30 lakhs into 100 divided by 40 means 75 lakhs is the fixed asset. Are you all really with me? That's it. So I got the fixed asset. Now stock turnover ratio with respect to cost of goods sold is how much time? 4 times. I can break that data, correct? I know that, sir, stock turnover ratio is equal to cost of goods sold divided by average stock of finished goods. They are saying that stock turnover ratio is how much time? So 4 is equal to, do you know what is cost of goods sold? What is the cost of goods sold? 50 lakhs. So 50 lakhs divided by average stock of finished goods. If no information has been given regarding the opening stock, I will be assuming it as closing stock. That I don't know, I have to do the question, right? So my dear lovable students, for average stock is equal to 50 lakhs. Am I right, sir? So average stock is equal to 50 lakhs divided by 4 comes to 12,50,000 is the average stock. Is information given regarding opening stock? So you have to write a note to that calculation that since no information regarding the opening stock, are you ready? Average stock will be considered as closing stock. That is equal to 12,50,000. Can I proceed? That data also I have used. Datas represent how many days sale? Sir, we got sale. Is there any information regarding cash sale? No, sir. That means entire sale will be assumed as. So 90 days credit sales will be the datas. 90 days credit sales will be the. I can simply calculate this without formula. You tell me what is the total sale? 62,50,000. That is equal to 360 days sale. Correct? Since no information has been given in the question regarding the cash sale, assumed that cash sale is equal to, credit sales is equal to 62,50,000. Can I find out the credit sales per day? So 62,50,000 divided by 360. So 62,50,000 divided by 360 come to 17,361.11 per day approx. Are you all ready with me? What question is saying that datas will be how many days credit sale? So datas is equal to 17,361.11 into 90 days. Always when you are put in calculator, please put 11111111, right? Into 90, you are getting as 15,62,500. So if you see the balance sheet, our receivable from the debtor will be 15,62,500. Are you able to appreciate? At this point, the level of clarity in all this will be where level? Are you really with me? I have cracked that also. Company hold cash equivalent, technically cash and cash equivalent, to 1.5 months cost of goods sold. 1.5 months. So they are keeping the cash balance based upon the cost of goods sold. First question to you, my dear. What is the cost of goods sold? 50 lakhs is the cost of goods sold. Are you really with me? Pakka. My dear lovable students, if the cost of goods sold is 50 lakh, sir, this 50 lakh is for 12 months, sir. Is for 12 months. Sir, why are you not taking the cost of goods sold for 360 days? I can take, but the expression is not on days. Expression is on. That is the reason or the logic why divided by 12 months into 1.5. Are you really with me? That means, my dear lovable students, 50 lakhs divided by 12 into 1.5 comes to 6 lakh 25,000 will be the cash equivalent or cash and cash equivalent in the asset side of the balance sheet. Comfortable? Ignore taxation. Assume 360 days in a year. Based on that only I proceeded everything. You are required to prepare the balance sheet as on 31st March in the following format. They themselves given the format. If format is available in the question, then my dear lovable students, we have to proceed with the format itself. Have we find out the fixed asset? How much? 75 lakh is the fixed asset. Have we find out the debtor? How much debtor? 15 lakh 62,500. Have we find out the closing stock? How much? 12 lakh 50,000. Comfortable? Have we find out the cash in hand? Yes, sir. 6 lakh 25,000. Are you really with me? If you add 75 lakh plus 15 lakh 62,500 plus 12 lakh 50,000 plus 6 lakh 25,000 comes to 1 crore 9 lakh 37,500. Are you comfortable? My dear lovable students, long-term loan already given in the question as 30 lakhs. Comfortable? Reserves and surplus closing balance already given in the as 20 and share capital already given in the question as, so here also I should have 1 crore 9 lakh 37,500. Right, sir? Is there any information to find out the sundry creditor? Then it will be a balancing figure, right? Then 1 crore 9 lakh 37,500 minus 40 lakh minus 25 lakh minus 30 lakhs comes to 14 lakh 37,000 is the amount of the sundry creditors. Comfortable? If you look at that, 14 lakh 37,500 is the amount of the sundry creditors. Sir, a student who are solving from question number 1 will be having a very good satisfaction that yes, I start getting the answer from the chapter. What analysis? This is such a question. This is a very good satisfactory question. Net profit 5 lakh we also calculated. Net profit by using net profit ratio sales we calculated. Are you really with me? We got the cost of goods sold as 50 lakh. We got the fixed asset as 75 lakh. We got the inventory as 12 lakh 50,000. We got the debtors as 15 lakh 62,500. And we got the cash and cash equivalent as 6 lakh 25,000. Are you comfortable? Sir, once you start get the answer, we fall into the subject. What? The ratio analysis. Right? Sir, if anyone have gone wrong, redo question number 8 and try question number 9. According to me, a very good question, normal question only, and try to determine these 5 things. And once you done that, you refer the lecture for the various angle of analysis, my dear lovable students. If we done with 9, 10 and 11, we are done with the chapter ratio analysis. I'm comfortable, sir. Where is the grand clap? Sir, very, very, very happy afternoon to all. So we are doing the book back of the ratio analysis. We have done 8 questions and we are moving into the 9th question. Following information relating to T Limited. Data's velocity 3 months. As we all know that, sir, the interpretation of data's velocity 3 months means 3 months credit sales are receivable. 3 months credit sales are, for example, credit sales divided by 360 or 365, you will get the average credit sales per day. Correct? Or divided by 12 months, you will get the average credit sales per month. So average credit sales per month into 3 months will be the data's velocity. Data's velocity interpretation, if I make a credit sales today, I will get the money within how much months? 3 months. I will get the money within 3 months. That's what data's velocity. And creditor's velocity is 2 months. Creditors velocity 2 months means if I make a credit purchases today, I have to make the payment within 2 months. Stock turnover ratio 1.5 times. Very bad actually. Because in an year, only 1.5 times it is rotating. GP ratio 25%. So automatically cost of goods sold ratio will be 75%. Bills receivable 25,000. It is part and parcel of the average accounts receivable. Bills payable 10,000. It is part and parcel of the average accounts payable. GP 4 lakh. Since GP ratio has been given, we can reverse to find out the sales. So sales is equal to GP divided by sales into 100. What is the gross profit ratio? 25%. So 25 divided by 100 is equal to, what is the GP? 4 lakhs divided by sales. Are you with me? So 25 sales is equal to 4 lakhs into 100. So sales is equal to 4 lakhs into 100 divided by 25 comes to 16 lakhs is the sales. My dear lovable students, if sales is equal to 16 lakhs, classified into two categories. Number one, gross profit ratio at the rate of 25% and cost of goods sold at the rate of 75%. So 16 lakh into 25%, they themselves given 4 lakhs. Are you really with me? Then 16 lakhs minus 4 lakhs comes to 12 lakhs is the cost of goods sold. Fine, fantastic to the core. Then fixed asset turnover ratio is 4 times. Closing stock of the period is 10% above the what stock? Opening stock. So if the opening stock is 10,000, closing stock is equal to 20,000. Because closing stock of the period is 10,000 above the opening stock. You have to calculate sales. Yes, I have already calculated sales is equal to 16 lakhs is the sales. I have already calculated cost of goods sold. Cost of goods sold is equal to 12 lakhs is the cost of goods sold. Right, sir? Now they want sundry datas. With the datas velocity, can I convert that into, sir, datas turnover ratio? Sir, datas turnover ratio is equal to credit sales divided by average accounts receivable. Correct? If datas velocity is equal to 3 months, so datas turnover ratio is equal to 12 divided by 3 comes to 4 times is the datas turnover ratio. That means I can convert the velocity into turnover. Nothing. If I make a credit sales today, I am getting money within 3 months. Sir, so April, May, June, July, August, September, October, November, December, January, February, March. In a year, 3 months are there. Are you really with me? That means datas turnover ratio is equal to 4 times. 4 times. So velocity is like direct and times is like indirect. So if I am having datas turnover ratio as 4 times, I can easily find out the average accounts receivable. Correct? Because, sir, if the datas turnover ratio is 4 times, I can indirectly say that what by what? Credit sales divided by average accounts receivable. So what is the datas turnover ratio? 4 is equal to, no information has been given regarding the cash sales. So entire sales are credit sales, which is nothing but 16 lakhs divided by average accounts receivable. Am I right, sir? So 4 average accounts receivable is equal to 16 lakhs. So average accounts receivable is equal to 16 lakhs divided by 4 comes to 4 lakhs is the average accounts receivable. Average accounts receivable is equal to opening receivable plus closing receivable divided by 2. Correct? Sir, average is equal to how much lakh? 4 lakh. So opening receivable plus closing receivable is equal to 8 lakhs. Is there any information regarding the opening receivable? No, sir. Nothing, sir. So I can't take it as average receivable. I will just take it as closing receivable, because here instead of taking average receivable, can I take it as closing accounts receivable? Can I proceed like that? So if that is the case, my dear lovable students, sir, closing accounts receivable is equal to 16 lakhs divided by 4 comes to 4 lakh. So closing accounts receivable is equal to, sir, closing debtors plus bills receivable. Correct? Closing debtors plus bills receivable comes to how much lakh? So inside this how much lakh? 4 lakhs. I am having both what and what? Sir, bills receivable already given in the question as, that means debtors is equal to 4 lakhs minus 25,000 comes to 3 lakhs 75,000. That's what entry debtors 3 lakhs 75,000. Can I proceed, sir? Fantastic to the code. Coming to creditors, sundry creditors. Again, the same route I will follow. I am having creditors velocity. Creditors velocity as 2 months. Can I convert the creditors velocity of 2 months into creditors turnover ratio, which is equal to 12 divided by 2 comes to 6 times is the creditors turnover ratio. Correct? Sir, 6 is equal to credit purchases divided by average accounts payable. Sir, starting itself there is no average accounts payable, there is closing accounts payable. Correct? Otherwise, after doing everything, we have to rectify it. Are you ready with me? So, my dear lovable students, sir, I need the credit purchases. I am having cost of goods sold is equal to 12 lakhs is the cost of goods sold. If you ask me, opening stock plus purchases, I will get the subtotal minus closing stock is the cost of goods sold. So, cost of goods sold is equal to 12 lakhs. I don't know what is the opening stock. Whatever it may be, I am taking 10,000 as opening stock. Right up. Then 20,000 will be the what stock? Closing stock. Because whatever may be the amount, if this is 10,000, that will be 20,000. If this is 3 lakh, that will be 3 lakh 10,000. Are you really with me? Because closing stock is 10,000 more than the. Are you really with me? So, my dear lovable students, sir, 12 lakh 20,000 is the subtotal. If I go to purchases, man, sir, 10,000 minus 12 lakh comes to 12 lakh will be the purchases. Correct? This purchases is assumed figure. Correct? Is there any way to find out the closing stock? Is closing stock available in the question? No, sir. Closing stock not available in the question. Correct? I am having stock turnover ratio. I can apply stock turnover ratio. Correct? Sir, stock turnover ratio is equal to cost of goods sold divided by closing stock. Because average stock, can I take a? Yes, sir. Because the relationship between opening stock and closing stock has been given in the. So, better to take the average stock. What is the stock turnover ratio? 1.5 is equal to 12 lakhs divided by average stock. Correct? 1.5 average stock is equal to 12 lakh. So, average stock is equal to 12 lakhs divided by 1.5 comes to 8 lakhs is the what stock? Average stock. So, average stock is equal to opening stock plus closing stock divided by 2 comes to. That means opening stock plus closing stock is equal to 16 lakhs. If I take opening stock as X, closing stock will be X plus 10,000. Correct? That will be equal to 16 lakhs. Correct, sir? So, X plus X, 2X plus 10,000 is equal to how much lakh? 16 lakh. So, 2X is equal to 16 lakh minus 10,000. So, 2X is equal to 15 lakh 90,000. Are you really with me? So, X is equal to 15 lakh 90,000 divided by 2. 7 lakh 7,95,000 is the opening stock, correct? So opening stock is equal to 7,95,000 and closing stock is equal to 7,95,000 plus 10,000 comes to 8,05,000. Since the actual figures are available, I will not apply the deemed figures. Are you really with me? What is the closing stock? Just now you find out. 8,05,000. Are you really with me? So my dear lovable students, 12 lakhs plus 8,05,000 comes to 20,05,000 is the subtotal. Correct? I got the opening stock. How much? 7,95,000. What is the purchases? 12,10,000 is the purchases. Are you really with me? Yes, sir. Before I rub, what was the purchases? 12 lakh was the purchases. Are you really with me? Because the difference is 10,000 I just made. That's it. Hello, sir. Since nothing has been given in the question, I am assuming that the entire purchases are. So 6 is equal to 12,10,000 divided by closing accounts payable. So 6 closing accounts payable is equal to 12,10,000. Comfortable? So closing accounts payable is equal to 12 lakhs divided by 12,10,000 divided by 6. So 12,10,000 divided by 6 means 2,01,667 is the closing accounts payable. Correct? So 2,01,667 classified into two categories. Number one, bills payable, creditors. Bills payable already given in the question as 10,000. Comfortable? So 2,01,667 minus 10,000 comes to 1,91,667 is the 1,91,667. Can I proceed, sir? Closing stock we just now find out comes to 8,05,000. Fixed asset, for fixed asset they have fixed asset turnover ratio. So simple, fixed asset turnover ratio is equal to sales divided by fixed asset. Correct? Is equal to how much times? 4 times. So 4 is equal to, you know, sales 16 lakhs divided by fixed asset. Right, sir? So 4 fixed asset is equal to 16 lakh. So fixed asset is equal to 16 lakhs divided by 4 comes to 4 lakhs is the amount of fixed asset. Comfortable? So 4 lakhs is the amount of fixed asset. If I check the answer, man, the first one, determination of sales. Sales is 16 lakhs. Have we got? Cost of goods sold 12 lakh. Have we got? Determination of sundry debtors. 3,75,000 is the sundry debtors. Have we got 3,75,000? Yes, sir. We also got 3,75,000. If you calculate the creditors, my dear lovable students, 1,91,667 is the creditors. 1,91,667 is the creditors. Comfortable? We calculated the purchases and all. Closing stock, 7,95,000 is the, sir, average stock. From that, the closing stock comes to 8 lakh. We also got 8,05,000 as the closing stock. Comfortable? And the fixed asset comes to how much lakh? 4 lakh. ICI calculated on cost of goods sold. It should be sales. There is no doubt about it. Are you really with me? Because have the question said that calculate on cost of goods sold? In ICI, have they said based on cost of goods sold? No, sir. If you want the answer, fixed asset turnover ratio, in bracket, we have to write that based on cost of goods sold. If this is there, the answer should be 3 lakh. Otherwise, answer should be 4 lakh. Are you really with me? Pakka? Yes. According to me, our answer is correct. But they have taken based upon cost of goods. Assumption, all sales are on, all purchases are, stock turnover ratio and fixed asset turnover ratio may be calculated either on sales or on, they themselves are saying. Sir, don't calculate on cost of goods sold. Calculate on sales. The answer should be how much lakh? 4 lakh. Are you really with me? So these are the 4, sir, parts of the question. I hope that when you tried, you also got the right answer for all the 5 parts. Anyone got all the 5 parts right? Fantastic to the core. Brilliant, sir. So, my dear lovable students, if you have gone wrong, try this question once again and understand where you gone wrong and try question number 10. The happy news is we are having only 2 more questions, which is question number 10 and question number. With that, we can say that we are through with the chapter ratio analysis. Are you really with me? Sir, I am with you, sir, from your heart. Anybody is there? Where is a grand clap? Sir, very, very, very happy morning to all. So, we are doing ratio analysis book back questions. We have solved 9 questions out of 11 questions. I am moving into the second last question, which is question number 10. From the following information and ratios, prepare the balance sheet as of 31st March 2023 and income statement for the year ended on that date for Messrs. Ganguly and Co. Average stock 10 lakh. My dear lovable students, whether required or not, when we heard about the word average stock is equal to opening stock plus closing stock divided by 2 comes to 10 lakh. So, opening stock plus closing stock is equal to 10 lakh into 2 comes to 20 lakhs is the total stock, opening stock and closing stock. Current ratio is equal to 3:1. So, if the current ratio is equal to 3:1, that means current asset divided by current liability is equal to 3/1. Or net working capital is equal to 3 minus 1 is equal to 2. Correct. They have given acid test ratio. Fine. We can have application of acid test ratio is equal to quick asset divided by current liabilities. Or, I don't know whether required in the question or not, current asset minus inventory minus prepaid expenses divided by current is equal to 1/1. That means from here we can take current liability. Sometimes we can post there. That root we will come at the appropriate time. PBT, PBIT, which is earnings before interest and tax, which is EBIT to PBT, correct? So, EBIT divided by EBT is equal to 2.2 divided by 1. So, if the earnings before interest and tax is 2.2, EBT is 1. Always EBIT should be the bigger number. That's why numerator EBIT, because from EBIT only we will reduce the interest. We will get the EBT. Fantastic to the core. Average collection period, assume 360 days in a year, 30 days. That means the technical understanding of this is what I will be first taking the total credit sales during the year divided by 360 I will put. I will get the credit sales per day. Correct? Into 30 I will get the total data. So average collection period 30 days means if I make a credit sales today, my dear lovable students, I will be getting the money from the debtor within 30 days. Stock turnover ratio, use sales as turnover 5 times. So what they are saying is stock turnover ratio is equal to sales divided by average stock of finished goods. Average stock of finished goods. Right, sir? Which is equal to how much time? 5 times is the stock turnover ratio. Fixed asset turnover ratio is 0.8 times they have given. So, fixed asset turnover ratio is equal to sales divided by fixed asset. Sales divided by fixed asset. Comfortable, sir? Is equal to 0.8 divided by 1. Super, sir. Working capital 10 lakhs. 10 lakhs is the working capital. That's it. We have opened some data. Because if you have this, I can apply here. I can find out the current asset and I can find out the current liabilities. If I apply the current liability in the second one, I will get the quick asset. Current asset minus quick asset will be the inventory. So I can proceed with the stock turnover ratio. Comfortable? So root is opening. Yes, fantastic. Net profit ratio 10%. Fine. That means 90% will be the all the remaining things, because other things plus 10% will be 100%. GP ratio 40%. That means cost of goods sold will be Operating expense excluding interest. Yes, interest is not form part of operating expenses because interest is form part of finance cost. Correct? How much lakh? 9 lakh. Long term loan interest. How much percent? 12%. So indirectly they are saying that they are having long term loan. That's why 12% has been given. Otherwise, EBIT and EBIT relationship we can't establish. Correct? Tax is nil. Leave the tax is nil. What is required? From the following information and ratio, prepare the balance sheet as at 31st March and the income statement. They want typically trading P&L account and balance sheet question. Like this only a question will come in exam. Generally, the new trend is they are asking balance sheet and P&L, which will come for 7 mark to 8 mark in exam. That is the worth of this question. By using this question, we are supposed to do, sir, 7 to 8 mark. Fine. You can throw the answer because till now I am doing. From where I can start, first of all? Working capital. A right student should start from working capital. Working capital is equal to 10 lakhs. 10 lakhs is the working capital. Correct? Which is equal to current asset minus current liabilities. Correct? Which is, what is the current ratio? 3:1. Which is equal to 2. Which is equal to. So I can break two things, my dear lovable students. One is current asset and other is current liabilities. Current asset, which is nothing but 10 lakhs divided by 2 into 3. What is the amount of current asset? 15 lakhs. 15 lakhs is the total current asset. Comfortable? Coming to the current liability, my dear lovable students. 10 lakhs divided by 2 into 1 comes to 5 lakhs is the current liabilities. Are you able to appreciate? Super fantastic to the core. Sir, I am not writing the answer. You have to throw me the answer. Where I should pitch next? Quick asset. So quick ratio I can use, right? So quick ratio is equal to current asset minus inventory minus prepaid expenses divided by current liabilities. What is a trump card for me here? Current liabilities. By using the current liability only, current assets and current liability only, I will be finding out the, basically I will apply these two part. I will get inventory minus prepaid expense. Always prepaid expense I will assume as 0. Always. If nothing has been mentioned in the question. So is equal to, what is the quick ratio? 1:1. So 1 divided by 1 is equal to 15 lakhs is the current asset minus inventory I don't know divided by 5 lakhs is the current liability. Can we cross multiply? That means 5 lakh is equal to 15 lakhs minus inventories. Are you really with me? So inventory is equal to 15 lakh minus 5 lakhs comes to 10 lakhs is the inventory. Are you really with me? So in this even current asset I got one more split. Inventory I got as 10 lakh. What is the next immediate data I have to pitch in the question? Stock turnover ratio. Brilliant. Stock turnover ratio. Because till now I was saying, I hope your mind started working how to get that right up. Stock turnover ratio is equal to sales divided by average stock of finished goods. Is there any way to find the average stock of finished goods? Given in the question. As how much? 10 lakhs. That's what the first data they have given, right up. Which is equal to 10 lakh. And they specifically mentioned that use the sales instead of cost of goods sold. So what is the stock turnover ratio? 5 is equal to sales divided by 10 lakhs. Comfortable? So sales is equal to 10 lakhs into 5 comes to 50 lakhs. Are you really with me? Super fantastic to the core. What is the next data I will pitch in this question? Gross profit ratio. GP ratio I can. GP ratio is equal to. So I can, sir, classify the sales into two categories. Sales 50 lakhs classified into two categories. Number 1, gross profit ratio, cost of goods sold. Right, sir? Cost of goods sold is how much percent? So 50 lakhs into 60% comes to 30 lakhs is the cost of goods sold. and gross profit ratio 40% comes to 20 lakhs is the gross profit ratio. Comfortable? Fantastic to the core. What is the next data I can pitch in this question? I can take net profit ratio, right? Net profit ratio is equal to 10%, which is straight away sales into 10% is equal to 5 lakhs is the net profit ratio. Comfortable? What is the next data I can pitch in this question? Yes, I can use EBIT divided by EBT, right? Is equal to what by what? 2.2 divided by 1. 2.2 divided by 1. My dear lovable students, is the EBIT given in the question? No, sir. Is the interest given in the question? Amount is not given, but percentage is given. Okay. So, in order to break that, I should know the debt. Because debt into 12% only will give the interest. Is the debt component straight away given in the question? No, sir. For that, we have to draw the balance sheet. Let me ask you a question. I will pitch this. Is there any other data in the question without even this much research? Can I found, or this is the last resort? Fixed asset turnover ratio. So, I will be more interested to first work out the fixed asset turnover ratio than this ratio. That is the order of doing. Okay. So, fixed asset turnover ratio is equal to sales divided by fixed asset is equal to 0.8 divided by 1. Do you have sales? How much? So, 50 lakhs divided by fixed asset is equal to 0.8 divided by 1. That means 0.8 fixed asset is equal to 50 lakhs into 1. So, fixed asset is equal to 50 lakhs into 1 divided by 0.8 comes to 62 lakh 50,000 is the fixed asset. I am having fixed asset. I am having current asset. I got the total asset. I can drag the total asset to the total liability. I can fill one the other things, right? Okay, man. Out of the data balance available in the question, what is the other ratio I can easily pitch? Average collection period is equal to how many days? Given in the question. Correct? That means average collection period 30 days. From this, what answer we will get? Datas we will get. Correct? As we all know that datas turnover ratio is equal to credit sales divided by average accounts receivable. Correct? Sir, is sales given in the question? Can I take the entire sales as cash sale? No, sir. Only credit sales. Correct? Tongue slip. Can I take the entire sales as credit sale? Yes, sir. No other way. I have to proceed like that. Average accounts receivable means opening receivable plus closing receivable divided by 2. Yes, sir. So, my dear lovable students, is it average accounts receivable or only closing receivable? Because no information regarding that. So, I have to change the data as closing receivable. Correct. Now, I am having only here average collection period. Average. Can I convert this into data turnover ratio? Yes, sir. What I have to do? 360 or 365? Because question specifically said that assume divided by how many days is equal to 12 times is the data turnover ratio. Nothing, man. If you make credit sales today, within 30 days you are getting money. In a year, how many 30 days are there? 12. Technically, after Friday, Sunday, public holiday and all. Yes, sir. So, my dear lovable students, 12 times is equal to, what is a credit sale? 50 lakhs divided by closing receivable, closing debtors technically, right? So, I can cross multiply. 12 closing receivable is equal to 50 lakh. So, closing receivable is equal to 50 lakhs divided by 12 comes to 4,16,667. Am I right with the figure? So I got one more split for the current asset. Sir, total current asset is equal to 15 lakhs. Already I got stock of 10 lakh. Then I bifurcated to debtors as 4,16,667. Correct? 4,16,667. Is there any other possible to break current asset or other current asset? That's it. It can be other current asset or cash. Whatever it be the way you can bifurcate. Comes to 83,333. 83,333. Is there any other data I can break from the question given? EBIT divided by, are we pending only with that? For that we have to draw the balance sheet. Chuma pro forma balance sheet. Chuma ideal. Fixed asset. How much lakh? 62 lakh 50,000. Current asset 15 lakhs. Anyway, there is a split of current asset. I accept it. Total asset 77 lakh 50,000 is the total asset. I am coming here also, man. 77 lakh 50,000. Right, sir? Already current liability we find out. 5 lakhs. Correct, sir? Sir, there are only two elements in the remaining in the balance sheet. One is equity, share capital, and the debt. Correct. Share capital and the debt. Any of the item given in the question? No, sir. None of the item given in the question. But they have given just a hint that debt will be how much percent? 12%. Correct? So we may have to break the interest. From that we may have to understand that that is a 12%. And we may have to reverse the what? Debt. Let me ask you one question. Have they given income related statement any item? Operating expenses. Operating expenses, they said that 9 lakh. Operating expenses is excluding interest is 9 lakh. In this 9 lakh, who is not there? Interest is not there. So what is the root? GP minus operating expenses will be the EBIT. Are you really with me? Think of it. Logically understand. Don't by heart. Sales minus variable cost, contribution minus fixed cost is what? EBIT. Correct. Inside this fixed cost, sir, you will be having operating fixed cost. You don't have financial fixed cost because from the EBIT only will be reducing the interest. You will be getting EBT, earnings before tax. Sir, in this format only I know, sir, to find out the EBIT, which is nothing but sales minus variable cost, contribution minus fixed cost, EBIT. But that format is not using here. What format I am using here is in T shape, we will be having by sales. Am I right, sir? We will be having to cost of goods sold, which I am saying as opening stock, add purchases, minus closing stock. Everything will be giving me a factor of cost of goods sold. Right, sir? Generally, I will be getting what profit? Gross profit. And this gross profit will be writing here by GP, super fantastic to the core, to operating expenses. Operating expenses I will be reducing. Operating expenses such as salary, rent, this, that, etc. Hello, sir. So if I add cost of goods sold, and what expenses? Operating expenses. I will get the operating cost. I will get the, you think as a businessman, are you selling goods? Without selling goods, can you be a trader? No, sir. In order to sell the goods, you need salary. You have to pay salary. You have to pay rent. You have to take care of admin. Without incurring all that, I can run the business. That means, if I don't incur the what of goods sold, that is a basic, man. I'm selling only goods. Correct? That's what cost of. And I'm incurring the what expenses. That is called as what cost. So from the sales, if I am reducing the, I will be getting technically the EBIT. Right, sir? But in accounts, what we are doing, we are only reducing what of goods sold. We are getting GP. Because in accounts, We are having a analysis of by selling the goods, how much I earned. By selling the goods, that's what sales minus cost of goods sold. But the objective of FM is not that. Objective of FM is you incurred 100 rupees sales. Okay, va? And your operating cost is what? 70. What? Financial management. Actually, this part, sales minus variable cost, contribution minus fixed cost, EBIT is the costing part, not the FM part. I already introduced to you. From EBIT only our subject financial management starts. Correct. What this guy is saying that, which guy? Costing, I will see as cost. That's what cost? Operating cost. In order to operate the business, you have to sell the goods. To sell the goods, you have to incur the cost. You have to incur the. For example, sir, I am paying interest. Sir, that interest is not to sell the goods. It is to finance the money. That's why it is finance cost. Are you able to appreciate? Are you able to live with me? Sir, I am paying tax. Sir, tax is not a operating cost. Because of operation only I am getting profit. Since I am getting profit only I am paying tax. Correct? That's why even in cash flow statement AS3, we are adjusting tax paid as the cash flow from the operating activity. That was a final item. That's what we will say, that profit before tax. Operating profit before tax. Less tax we will be reducing. Are you remembering? So what costing subject is saying, that we will see as cost. Sales minus operating cost, which comprises of cost of goods sold and the operating expenses. So I am having cost of goods sold in my hand. How much? 30 lakh. Plus I am having operating expenses of 9 lakhs. Are you all really with me? So the total cost comes to 39 lakhs. 39 lakhs. This is the operating cost. Operating cost. Sir, that is a technical or basic difference between cost and an expense. For example, I am having salary, I am having rent, I am having expense 1, I am having expense 2, I am having expense 3. I will say cost. I will say cost. Group of expense is called as what? Cost. For example, your friend has constructed a house. Will you ask that how much is for single or how much is for house? என்ன கேட்பேன்? எவ்வளோ காஸ்ட் ஆச்சு சார் கேட்பேன். வீடு கட்ட எவ்வளோ எக்ஸ்பென்ஸ் ஆச்சுன்னு கேட்க மாட்டேன் நீ. கரெக்டா? So that's why we are having the terminology called as operating. So it should be mix of some 2 or more expenses. That's what cost of goods sold plus fine. That's we break. So sales minus operating cost. What is a sale? 50 lakhs is a sale. What is the operating cost? 39 lakh. 50 lakh minus 39 lakh. 11 lakhs is the earnings before interest and tax. Comfortable? Now I know that, sir, the formula EBIT divided by EBT is equal to 2.2 divided by 1 is equal to 11 lakhs divided by 11 lakh minus interest. 11 lakh divided by 11 lakh minus interest. Comfortable? So 11 lakhs into 2.2 comes to 24 lakh 20,000. Am I right, sir? Minus, sir, 2.2 interest. Because 2.2 into interest, correct? 2.2 interest is equal to how much lakh? 11 lakh. Hello, sir? Proceed to the next step. 13 lakh 20,000 is equal to 2.2 interest. So interest is equal to 13 lakh 20,000 divided by 2.2 comes to is equal to how much percent? That's what given in the question. That's what the hook. So I understood that 6 lakhs is the interest. 6 lakhs is the interest. So let me ask you a question. What was the operating expense without interest? 9 lakhs plus 6 lakhs comes to 15 lakhs. What was the GP? 20 minus 15. What is the sale? 10% NP. Tally it, net profit is equal to 5 lakh. Are you able to appreciate what I am talking to you? Why I checked na, is there any other item is there in between path? In P&L, all elements has been matched. Otherwise, I have to put it as other expenses. Other expenses. Other expense won't be there because they expressly said that this is the amount of the operating expenses. Adhik mele other expense. Excluding interest. Interest be taken out. Other than this, nothing will be there in the P&L. Can I proceed? Able to appreciate? That's it, game over. So I am very confident because, okay, fine, all my figures are matching. This mind game should be there throughout when you are solving all chapters, especially ratio analysis. Come on. So debt principal is equal to 6 lakhs divided by 12% comes to 50 lakhs. Fine. I was struggling to fill my balance sheet. Now God has given some figure. Correct, sir. Debt is how much lakh? At the rate of. So I know that 77 lakh 50,000 minus, sir, 55 lakhs technically comes to 22 lakh 50,000 is the share capital, including reserves and surplus. Because current year net profit is there. Correct. Current year net profit is there of 5 lakhs. Done. Done with the balance sheet. We have not done with the P&L. It's not a great deal because just we have to copy paste. That's it. Sir, by sales, how much? 50 lakhs. Is opening stock given in the question? No, sir. Is there any way to find out the opening stock? No. Average stock is given in the question. And we know the closing stock. Yes, sir. So I have to break. Otherwise, your P&L will be wrong. Okay. Sir, if I write COGS also, you'll get the GP, man. Okay. But it is wrong. You have to write to opening stock by closing stock. Because that's the detailed answer. Okay. So average stock is equal to how much? 10 lakhs. Already given in the question. So opening stock plus closing stock is equal to 20 lakh. Actually, we already analyzed. In that, my dear lovable students, what stock we know? Closing stock. How much? 10 lakhs. Opening stock will automatically how much lakh? 10 lakhs. Because to opening stock 10 lakh by closing stock 10 lakh. They are maintaining the same stock level. They are maintaining the. Why they are maintaining same stock level, we'll discuss in the working capital management. To purchases, surely I can break purchases, which will be equal to cost of goods sold. How much? 30 lakh. Sir, why sir equal to? Because same figure only opening stock. Same figure only. Same figure you are adding, same figure you are lessing. Getting it to GP 20 lakhs. Immediately here 60 lakh here and here also 60 lakhs. Comfortable. By GP brought down 20 lakhs. Clarity. To operating expenses given in the question 9 lakh. To interest we find out 6 lakhs. Comfortable. To net profit 5 lakh which is at 10%. So total will be here 20 lakhs and 20 lakhs. When you are doing this sum, please leave the answer first for the main answer. All the balance circus you give it as working note, my dear lovable students. Are you very much comfortable with the chapter ratio analysis? Are you able to link and cover everything? I am with you, sir, from your heart. Anybody is there? Where is a grand clap? Try if you go wrong this question number 10. And we are having only one question, my dear lovable students, which is question number 11. That is little scary and little tough because some application of science X, Y, Z and all will be there. Read question, try to solve by your own. If you are able to solve means you are really very level. Think of it, it will be of a different league question. If you don't get answer also don't worry. NSR, I am not NSR studied ratio analysis. It's not like that. This is one of such somewhere. It's not a normal question. Okay. So don't evaluate your performance with this question I am saying. This is one type of question where if the examiner is so much calm, such questions will be asking. So we'll be meeting with question number 11. If you have gone wrong, redo question number 10. Otherwise, try question number 11 and come back. Sir, very, very, very happy morning to all. We are in the mission of completion of book back question of the ratio analysis. My dear lovable students, we are pending only with one question, which is question number 11, which is a variety sum, a unique sum. From the following information, you are required to prepare a summarized balance sheet of Rudra Limited for the year ended 31st March 2023 is the question. Fine, sir. Debt equity ratio 1:1. From this, I can understand that debt is equal to equity. Because if 1 rupees is the debt, 1 rupee is the equity. Current ratio 3:1. That means net working capital is equal to 3 minus 1 is equal to 2. Correct? Acid test ratio 8:3. Acid test ratio means quick ratio. Quick ratio. Correct? Quick asset divided by current liabilities is equal to 8 minus 3 is equal to 5. So, my dear lovable students, what is 8 quick asset? What is 3 current liabilities? Correct? Basically, current asset minus inventories will be the what asset? Quick asset. Correct? So, I am not going 8 minus 3. Let it be quick asset divided by current liability itself for the time being. Fixed asset turnover ratio on the basis of sales 4 times. Stock turnover ratio on the basis of sale 6 times. Cash in hand 5 lakh. Stock to debtor 1:1. So stock is equal to debtor. Sales to net worth 4 times. Capital to reserve 1:2. GP ratio 20% on cost. Generally GP will be expressed on sales. In this question they have expressed on cost. Cost of goods sold to creditor 10:1. Interest for the entire year yet to be paid on the long-term loan at the rate of 10%. That's it. If the same question come in examination without reading for the first time, you will be searching where to start, when to start. So basically, if you see the pattern of the question, every data they have linked to sales, because on the basis of sales, sales to net worth. So everything they want to connect to the sales. So we will understand one by one. Sir, I am not going to give the answer. I am going to give the thought of why we are proceeding, how we are proceeding, my dear lovable students. The first one, fixed asset turnover ratio is equal to sales divided by fixed asset is equal to 4. So 4 divided by 1. I don't know sales. Throughout the question, they have not expressed what is the sales. Correct? So let me assume that sales is equal to X, because lot of place we need sales. So my dear lovable students, X divided by fixed asset is equal to 4 by 1. X divided by fixed asset is equal to. Sir, don't understand ratio, understand the logic. What they are trying to say is, if 4 rupees is the sale, 1 rupee will be the fixed asset. If 4 rupees is the sale, 1 rupee is the. So if I ask you what is fixed asset is equal to sales divided by 4. Sales divided by, you can do cross multiply. For example, X is equal to 4 fixed asset. Fixed asset is equal to X by 4. That also you can done. But technically, instead of cross multiplying, understand the real essence. Nothing man. X divided by what asset? Fixed asset is equal to 4 by 1. What is the meaning of that? Sir, X is equal to 4 and fixed asset is equal to 1. Right? That means if 4 rupees is the sale, 1 rupee is the. That means I don't want, sir, sale. I want the fixed asset. What is fixed asset? Sales divided by 4. Sales divided by 4. For example, only for one ratio, I will explain this much. Sir, X divided by fixed asset. Assume 4 lakh is the sale. Assume. Divided by what asset? Fixed asset is equal to 4 by 1. Na? So, if 4 lakh is equal to 4, then fixed asset should be equal to 1 lakh. So, if someone is asking what is fixed asset? Fixed asset is equal to 4 lakhs divided by 4. This is what I also expressed, that fixed asset is equal to what by 4? X by 4. Can I proceed? So, first thing I have find out that fixed asset is equal to X by 4. So, total sales divided by 4 will give you the what asset? Fixed asset. Look at here. That's the first one. Fixed asset turnover ratio. What is the ratio? Sales divided by, which is 4 by 1. Then I don't know what is sale. So X divided by fixed asset is equal to, that means fixed asset is equal to X by 4. Are you clear? Next, I am going to use the stock turnover ratio. That is the second hashtag I am going to use. Stock turnover ratio is equal to generally cost of goods sold divided by average stock. Correct? But question specifically said that based on sales. So sales divided by average stock of finished goods. Basically closing stock, because there is no information regarding the opening stock. Can I proceed? Is equal to what by what? What by what? Sales, sir, stock turnover ratio. 6 by 1. 6 by, that means 6 rupees is the sale, 1 rupees is the stock. 1 rupees is the, I don't want sale, I want the stock. So stock is equal to sales divided by 6. That is equal to X divided by 6. Sir, what are you doing, sir? I am finding out the items of the balance sheet. Items of the, is fixed asset item of balance sheet? Yes, sir. What item? X by 4. Is stock item of balance sheet? Yes, sir. This is a part of current asset. This is part of, because fixed asset plus current asset will give me total asset. Are you really with me? That's it. The second one. So just apply, sir, stock turnover ratio. What is the formula? Sales divided by stock. That is equal to 6 divided by 1. So I don't know sales. That's why I have taken as X. X divided by stock is equal to 6 by 1. So stock is equal to X by 6. Are you comfortable? Fine. Next one, related to sales. I am having formula. Sales to net worth. Sales to, sir, sales divided by net worth is equal to 4 divided by 1. What is the meaning? If 4 rupees is the sale, 1 rupees is the net worth. Correct? Is net worth an item related to balance sheet? Yes, sir. Will be coming on the liability side of the balance sheet. Right? So now I am finding out the item related to what? Balance sheet. So net worth is equal to sales divided by 4. Are you really with me? That is equal to X divided by 4. Here I am not cross multiplying. You can cross multiply also. But when you cross multiply, your mind will not work. You will be something doing. Hello, sir. But I want to picturize. So net worth is equal to X by 4. X by 4. Are you comfortable up to this, sir? That's what they are saying. Sales to net worth. Sales divided by net worth. 4 divided by 1. X divided by net worth is equal to 4 by 1. So net worth is equal to X by 4. Comfortable, sir? Now I am using debt equity ratio. What equity ratio? Sir, debt equity ratio is equal to debt divided by equity. Debt divided by, debt means long term debt. Debt means, why, sir, debt means long term debt you are saying? Because interest for the entire year is to be paid on what loan? Long term loan. So they are specifically saying that we are having long term debt, right? Divided by what? Equity. My dear lovable students, equity means net worth. Equity means, just now I finalize the net worth as X by 4. Are you really with me? That means, what is the ratio given? 1 by 1. That means long term debt is equal to equity. Are you really with me? That is equal to X by 4. That is equal to, clarity. So that also I have finalized, my dear lovable students. The next finding also, debt equity ratio means debt by equity, which is 1:1. So 1 by 1. So long term debt divided by net worth is equal to 1 by 1. Hence I understood that long term loan is equal to net worth. So long term loan is equal to X by 4 because my net worth is X by 4. Are you able to appreciate? Coming to the GP ratio to the cost. That's the next hashtag I am going to work out. Generally GP ratio means GP divided by sales into 100. But here it is not like that. Here it is GP divided by cost into 100. Correct? So GP divided by cost into 100 is equal to 20%. Clarity? I can rewrite that GP divided by, tell me, sales minus GP. Sales minus GP. What is sales minus GP? Sir, why are you bringing sales? Because that is a villain here. That's why I have assumed as X. That's why cost has been expressed in different form, which will come X. Are you really with me? is equal to 0.2. Can I say like that? That means, can I now cross multiply? GP into 1 is equal to GP, which is 0.2 into sales minus GP. Am I right, sir? So, gross profit is equal to 0.2 sales minus 0.2 GP. Here also GP, there also GP. Correct? So, GP plus 0.2 GP is equal to 0.2 sales. Are you really with me? So, 1.2 GP is equal to 0.2 sales. Just cross multiplication. Hello, sir. That means I want GP. GP is equal to 0.2 sales divided by 1.2. I can knock off this as 1 by 6. Correct? Because 1.2, 0.2, 0.2, 0.2, 0.2, 0.2. Are you really with me? 1 point. How much time? 6 times. So 1s divided by 6 or s by 6 or x by 6 is the GP. So if the sales is some amount, I don't know. Only God knows. If I do divided by 6, I will get the gross profit. I will get that sales is how much. That's what my NSR traveling is all about. Are you really with me? That's what they have done here. Look at here. GP divided by cost is equal to 20%. It can be rewritten as GP divided by sales minus GP. What is sales minus GP? That's what cost is equal to 20%. Just cross multiply. GP divided by X minus GP. What is X? Sales. Is equal to 0.2 divided by 1. Cross multiply. That's what GP into 0.1. GP into 1. GP is equal to 0.2 into X minus GP. Able to appreciate? So GP is equal to 0.2 into X. 0.2 X minus 0.2 into GP. 0.2 GP. I am bringing minus plus together. So GP plus 0.2 GP is equal to 0.2 X. So what 0.2 GP plus GP is equal to 1.2 GP is equal to 0.2 X. So GP is equal to 0.2 X divided by 1.2. So GP is equal to X by 6. We also got X by 6. Sir, once you know how much is the GP, can you find out the cost of goods sold? Very easy, man. Cost of goods sold is equal to sales minus GP. We know that sales is X minus GP is X by 6. Can I cross multiply? Basically 6x minus x divided by 6, which is equal to 5x divided by 6 is the cost of goods sold. 5x divided by 6. That means nothing. What is the sale value? X. I don't know. Maybe 1 lakh. I don't know. Multiply by 5 times. So 1 lakh into 5, 5 lakh. Divided by 6 will be the cost of goods sold. After I get the answer, whatever answer I am getting, if it is multiplied by 5, I will be getting some value. Divided by 6 will give you cost of goods sold. Comfortable? Now I am having cost of goods sold. Now I can proceed to creditors. Correct, sir? The next one, next formula, it is available in the question. Cost of goods sold divided by creditors is equal to 10 divided by 1. You know cost of goods sold? Yes. Just now I know 5x divided by 6 whole divided by creditors is equal to 10 by 1. Sir, if it is direct cross multiplication, I know. What is this 5x by 6? What I have to do with this? 5x divided by 6 creditors. 5x divided by nothing, man. Sir, this numerator, let it keep it as 5x divided by, sir, earlier it is what? Division. I am bringing down to multiplication. What? How much creditor? 6 creditors is equal to what by 1? That's it. Can I now cross multiply? Yes, sir. That means 5x is equal to 60 creditors. So x is equal to what by what? 60 creditors divided by 5. 60 creditors divided by 5 comes to creditors is equal to. We will take creditors out because x in our expression. Let me complete this. Sir, 60 creditors divided by 5. Correct? 12. That is NSR 12 creditors. 12 creditors. What? X. X is equal to 12 creditors. Okay. I got X is equal to 12 creditors. Already X means sales. I want the balance sheet item. What is the balance sheet item? So creditors is equal to X by 12. X by, for example, sir, how much is the sale? Don't know. So we put it as X. Assume 12 lakhs as sale. Assume. Assume how much lakh? Divided by 12 will be the creditors. I am saying some deemed figures. I don't know. Are you all really with me? Okay, man. Now, finally, I have to do everything. So, What is this calculation? Cost of goods sold divided by creditors is equal to 10 by 1. So 5x by 6 divided by creditors is equal to 10 by 1. Right, sir? So I am bringing the 6 down. So 5x divided by 6 creditors is equal to 10 by 1. So 6 creditors into 10, 60 creditors is equal to cross multiply 5x. So creditors is what I want because it is a balance sheet item. I am finding every balance sheet item. That means 5x divided by 60 or x divided by 12 because 5 and 60, 12 is the common factor. Are you all really with me? Done, man. Next one, stock to debtors. What? Stock divided by debtors is equal to how much? 1 by 1. That means stock is equal to debtors. Till now, have you find out stock? Yes, sir. How much is the stock? Already find out a stock. Yes, sir. X by. So I can directly apply that. This is equal to x by 6. Stock is equal to x by 6 is equal to debtors is equal to x by 6. So debtors is also x by 6. That's what I have done. Stock divided by debtors 1 by 1. So debtors is equal to stock. So debtors is equal to x by 6. Able to appreciate? Come on, man. What is the current ratio? Can I apply current ratio given in the question? Yes, sir. You have to be with me. Current ratio is equal to current asset divided by current liabilities. That is equal to 3 by 1. You know what is the current asset? Yes. I don't know total, but ingredients I know. What are the components? Stock plus debtors plus cash given in the question. I know stock is what? X by 6 plus debtor x by 6 plus cash 5 lakh. This is the total current asset. Are you already with me? So I can easily find out the current liability. Correct? Current liability is 3 current liabilities equal to current asset. Can I cross multiply? Correct? Look at here, man. 3 into current liability is equal to 3 current liability is equal to current asset. Are you already with me? So simple. 3 current liability is equal to current asset, which is x by 6 plus x by 6 plus how much lakh? 5 lakh. Hello, sir. Now I am having in a sir 3 current liability and x by 6 and 5 lakhs. What? How I have to proceed, sir? Sir, can I since the LCM எடுத்துக்கலாமா? X plus x comes to how much? So 3 current liability is equal to 2x divided by 6. What I have done common? Correct? 6 plus 5 lakhs into 6 or 5 lakhs? Just 5 lakhs. Hello, sir? Yes, sir. Yes, sir. Are you ready with me? Now, can I put it as by 1? Now, can I cross multiply? So, 3 current liability is equal to 2x plus 30 lakhs because 5 lakh into 6 divided by 6. Hello, sir. Can I again cross multiply? 6 into 3. 18 current liability is equal to 2x plus 30 lakhs. Right, sir? That means what liability is equal to? Current liability is equal to 2x plus 30 lakhs divided by 18. Can I common 2 common எடுத்துக்கலாமா? 2 cancelled. Yes, sir. Here 30 lakhs will become 15 lakhs. Sir, 18 will become. So current liability is equal to x plus 15 lakhs divided by 9. That means what they are trying to say. What is the amount of sale? I don't know. So we have given as x. Assume that 1 crore. Example. To that 1 crore, add a figure of 15 lakhs. Appreciating? Yes, sir. Divided by 9. That means indirectly what they are trying to say is this: if you add the stock and debtors, you will get the sales. If you add stock and debtors, you will get the sales. That's why x plus. What is x? Sales. Hello, sir. Yes, sir. Plus 15 lakhs. What is that 15 lakhs? Not cash. That is some amount after something. Hello, sir. Exactly what they are saying is stock plus debtors plus cash is the what asset? Current asset. Correct? What is the amount of stock? Whatever may be the sale value divided by 6 will give you the stock value. Whatever may be the sale value divided by 6 will give the debtors value. Correct? cash they themselves given in the question. So I know that, sir, here I cross multiplied current asset is equal to 3 times of what liability? Current liability. That means this is the current liability. If I put into 3, I will get the what asset? Current asset. Are you really with me? So current asset is equal to current 3 times of what liability? Current liability. You know current liability? So what I have to do? Current asset is equal to 3 into x plus 15 lakhs divided by 9. Correct? Yes, sir. So what I have to do the next step? 3 into x. 3, 9 can be cancelled. So it will be 1 and 3. Are you already with me? So what asset is equal to? Current asset is equal to x plus 15 lakhs divided by, hello sir. So how current asset is coming? You just think of it. You are having some x value, correct? To that x value you are adding plus 15 lakh. So you will be getting some figure cumulatively, correct? Here also divided by 9 will give you current liability. Divided by 3 will give you, take some summa figure. X taken as 10 lakh. Okay, I don't know. 10 lakh. Fraction will come. Fine. 10 lakhs plus 15 lakhs comes to divided by 9. So 25 lakhs divided by 9 means 2,77,778. Are you really with me? Is a current liability. Are you really with me? Here, X, how much we assume? 10 lakhs. The same 10 lakh I am assuming. 10 lakhs plus 15 lakhs, 25 lakhs divided by 3 comes to 8,33,333. Here, 2,77,000. Here, 8,33,000. Hey, this is not the final answer, man. So, relationship I am checking. What they said that current asset is equal to, current asset divided by current liability is equal to 3 by, so this is 1 basically. This is 1. So, into 3 should get this answer, correct? So, 2,77,777.777777777. Hello, sir. Into 3 getting, that means our relationship is correct. Are you able to appreciate? Can I proceed, sir? Why I am checking? No, otherwise, after I put the balance sheet, it will not get tallied. So now itself, I am checking whether the current asset and current liabilities are matching. Sir, can you repeat this? Yes, surely, if anyone is struggling. Simple, man. Current ratio is given as current asset divided by current liability, which is 3 by 1. Everyone knows. So from this, I understand that current asset into 1 means current asset, correct? That's what current asset is equal to 3 current liability. Are you all accepting? Sir, in this question, what are the components of current asset? Stock, debtors, cash. These are the 3 components of the stock. Is what by what? X by 6. Already we find out. Debtors, X by 6. Already we find out. Cash, 5 lakh. Already given in there. That means I know that 3 what liability is equal to? Sir, from where you got? From the equation I got. Are you really with me? So 3 current liability is equal to X by 6 plus X by 6 plus 5 lakh. Are you really with me? So because this is what the total will give you current asset. So current liability will be, 3 current liability is equal to current assets. Are you really with me? Okay, man. So 3 current liability will be, here you are having X and 6. Can we take the LCM? So X plus X, 2X divided by 6. Sir, how sir this is happening in max? Sir, for example, X by 6 plus X by 6 is there. Assume a figure for X. Say one figure for X. Can I take 12? Can I take? Can I assume Chuma X as 12? So what I am doing is here 12 divided by 6 plus 12 divided by 6. What is 12 by 6? 2 plus 12 by 6, which gives me a figure of 4. Are you all really with me? Okay. Here what I have written instead of that 2x by 6. So what is x you assume? 12. So 2 into 12 divided by 6. What is 2 into 12? 24 divided by 6. 24 by 6. Tallied. Are you all really with me? This is what actually happening. எதுக்கு சொல்றேன்னா யாருக்காவது என்ன சார் இங்க பண்ணிட்டு போனீங்க எனக்கு புரியலையே. There you done something na. This is what I done. This is what they are saying that NSR take the LCM and all, which is nothing but x plus x comes to 2x divided by common 1 digit of 6. Instead of dividing 2 times, since you are multiplying 2 times in the numerator, 1 division is enough, which will give the same answer. Can I? So 2x divided by 6 plus the 5 lakhs is 5 lakhs, right? So basically 2x divided by 6 plus 5 lakh. 5 lakh divided by 1 is there, always in max divided by 1 we will not write, correct? So now I am having the opportunity to cross multiply, hello sir, which is equal to 3 current liability is equal to 2x into 1, 2x, 6 lakh into 5 lakh, 30 lakhs divided by 6 into 1. That's why divided by 6. Now again I am cross multiplying. 6 into 3 current liability, 18 current liability is equal to, 2x plus how much lakh? 30 lakhs. Comfortable. Now I am taking the current liability out. Current liability is equal to 2x plus 30 lakhs divided by 9, divided by 18. Correct? Now I am cut shorting the formula because all our common factors are there. 2 means 1, 2. How many times 2 is there? 1 time. Sir, how many times, sir, 15 lakhs is there? 2 times. So inside this 30 lakh, 15 lakhs is 2 times. Right? In this 18, sir, 2 times yaar rika? 9. So basically 1x I will not express as 1x, I will express as x. So current liability is equal to x plus 15 lakhs divided by 9. Can I proceed? Sir, now I already having a old panchayat. What is already having old panchayat? Current asset is equal to 3 current liabilities. So I know what is the current liability. X plus 15 lakhs divided by 9. That means, my dear lovable students, current asset is equal to 3 into x plus 15 lakhs divided by 9. Correct? So what I can do, I can easily, since it is 3 and 9 are there, 1, 3, I can knock it off. So current asset is equal to x plus 15 lakhs divided by, comfortable? Okay, man. That's what they have done here. Sir, current asset is equal to 3 by 1. Debtors plus stock plus cash divided by current liability is equal to 3 by 1. 3 current liability is equal to x by 6. What's, man? What is x by 6? Stock or debtors, or x by 6 debtors plus 5 lakh given in the question. So 3 current liability is equal to x plus x comes to 2x divided by 1 6. Angiye avanga enna panntaanga 30 lakhs eduthu vantaanga. Are you really with me? One step itself they finished off. So 18 current liability is equal to 2x plus 30 lakh. So current liability is equal to x plus 15 lakhs divided by 9. We also got x plus 15 lakhs divided by 9. Can I proceed? We all know that, sir, current asset is equal to 3 current liabilities, which is 3 into 2x plus 30 lakhs divided by 18. So 1 and 9. That's what x plus how much lakhs, man? 15 lakhs divided by 9. Final, sir, x plus 15 lakhs divided by 9. 3 divided by 3. Are you all really with me? That's it. Up to this we are done. Now we all understood that current asset is equal to current liability. By that only we have solved that. So that we have done. Now calculation of x. To calculate the x, all the balance sheet item has to be placed in the balance sheet. Look at here, man. This is the balance sheet of Rudra Limited. Hello, sir. Sir, fixed asset, you know how much? X by 4. Correct? Sir, current asset, you know stock plus debtors plus cash. How much stock? X by 6. What is debtor? X by 6. What is cash? 5 lakh. Given in the actually x by 6 plus x by 6 plus 5 lakh is equal to current asset. Is equal to x plus how much lakh? 15 lakh divided by 3. That's what we find out now. So basically what by 4? X by 4 plus x plus 15 lakhs divided by 3 is equal to total asset. Because fixed asset plus current asset is equal to, are you really with me? Now coming to the liability side of the balance sheet, you know total current liability? Yes, sir. Just now we break it. Correct? X plus 15 lakhs divided by 9. Sir, outstanding interest, I don't know. I have to work out separately. Hello, sir. Other short-term current liability, sir, I don't know. But creditors, I know, x by 12. Sir, this is also part of what liability only? Total current liability. So, in the total current liability, outstanding interest is missing. That I have to find out. Then, long-term loan at how much percent? 10%. Already worked out. X by 4. Net worth, already worked out. X by 4. Are you really with me? Now, with all this, I am going to find out the calculation of X, which is nothing but X by 4 liability side. What is X by 4? Tell man, net worth. What is the next X by 4? Long-term debt plus X plus 15 lakhs divided by 9. Current liability. So, what you have done? Picture is the balance sheet. In the balance sheet, you have taken the number 1, net worth, long-term debt, current liability, total liability. Are you really with me? Yes, sir. Should be equal to the what asset? Which is nothing but fixed asset plus current asset. What is fixed asset? X by 4. What is the current asset? X plus 15 lakhs divided by 3. X plus 15 lakhs divided by 3. Are you really with me? Now I have to do that, sir. Again, the same denominator. Correct? So I can take it as what? 2x. Okay, we will solve it. First, say the liability side once again. X by 4 plus x by 4 plus x plus 15 lakhs divided by 9 is equal to x by 4 plus x plus x plus 15 lakhs divided by 3. Basically, what I have done is total liability is equal to total asset. Can I proceed? Now, can I knock off this part? Yes, sir. It will be 2x divided by 4. I said the logic just now. Correct? Plus x plus 15 lakhs divided by 9. Correct? Is equal to x by 4 plus x plus 15 lakhs divided by 3. What is the next one? Can I cross multiply this? Yes, sir. 9 into 2. 18x plus 4x plus 60 lakhs divided by 36. Easy? Cross multiplication able to appreciate? Should be equal to, can I cross multiply? 3x plus 4x plus 60 lakhs divided by 12. Correct? Can I once again cross multiply? No, sir. Because this is equal to. Correct? Plus only I can do. These two terms I can do. These two terms I can do. Now, this is total liability is equal to what asset? Total asset. In a different form I have done. Now I have to take it common. Is there any common? 9. 12 3s are 36. Yes, sir. So we will go with the 3. Okay, tell me. Okay, tell me. Other step 3 la 18x plus 4x plus 60 lakh divided by 3. Why, sir? 3. 12 and 12 into 3 comes to 36. Should be equal to 3x plus 4x plus 60 lakhs divided by 1. We will not put. Now, can we cross multiply? Yes, sir. Solunga. 18x plus 4x plus 60 lakh is equal to 9x plus 12x plus 1 crore 80 lakhs. Are you really with me? Now, shall we arrange all the x together? So, 18x plus 4x minus 9x minus 12x is equal to 1 crore 80 lakh minus 60 lakhs. Enapa clarity? 18 plus 4. So, 22x minus 9, 12. 21x is equal to 120 lakhs. Correct? 22x minus 21x. X or 1x is equal to 1 crore 20 lakh. Sales is equal to 1 crore 20 lakhs. Are you all really with me? Now everything is easy. Divided by 4, divided by 3, divided by 6, whatever you want, you can. Are you all really with me? So, my dear lovable students, we also landed with 1 crore 20 lakh. If anyone is having shortcut, very good at maths, you can by see the equation itself, 1 crore 20 lakhs. I don't have any ego because I don't know maths. Okay. I know only to solve like this, step by step approach only I know. If you are very specialist, sir, I don't have any ego saying that you are very good at maths. I am not good at maths. I am good at FM. Are you really with me? Come on. Fixed asset, my dear lovable students, which is nothing but x by 4. 1 crore 20 lakhs divided by 4 comes to 30 lakhs. Stock. 1 crore 20 lakhs divided by 6 comes to 20 lakhs. Debtor. 1 crore 20 lakhs divided by 6 comes to, this is equal to this, correct? Net worth. 1 crore 20 lakhs divided by 4 comes to 30 lakhs because fixed asset net worth matching in this. Long term loan. Sir, 1 crore 20 lakhs divided by 4 comes to, for this only interest we have to calculate, correct? Outstanding interest 30 lakhs into comes to 3 lakh. This will also be part of the current liability. But we know we have taken total current liability, correct? Creditors, sir, 1 crore 20 lakhs divided by 12 comes to, this is also a part of the current liability. Now, I understood that total net worth is how much lakh? 30 lakh. There, that split has been given. Capital to reserves, which is 1:2. So, 2 rupees will be the reserve and 1 rupee will be the, so total 30 lakh. 3 is 30 lakh. So 1 is 10 lakh. Easy. That's why 10 lakh. Able to appreciate? You want to do as calculator? Because 1 is to 2 means total 1 plus 2, 3. 3 comes to 30 lakh. Then 1 will be 10 lakhs. And 2 will be 20 lakh reserves. So split of the net worth also I got, which is capital and reserves. Now calculation of the other what term liability? I know total current liability. Correct? Total current liability is X plus 15 lakhs divided by 9. Just now I find out. What is X? 1 crore 20 lakh plus 15 lakhs divided by 9. So 1 crore 35 lakhs divided by 9 comes to 15 lakhs is the total current asset. In that already 10 lakh creditors booked. 3 lakh outstanding interest booked. Correct? So other short term liability will be 2 lakhs as the what figure? That's it. Sir, they have done something I don't want. I have done 2 lakhs. Are you really with me? Just tally it. Now coming to the answer called as balance sheet. Hello, sir. Nothing. Wherever you put the X, you, sir, replace with the numbers. Look at here. Fixed asset, how much lakh? 30 lakhs. Current asset, big list. Stock in trade, 20 lakh. Debtors, 20 lakh. Cash, total comes to 75 lakhs. Comfortable. So here it should also be outstanding interest. We already find out. 3 lakhs. Other short-term current liability balancing figure. How much lakh? 2 lakh. Creditors, 10 lakhs. That's what the list of current liability. Correct? Sir, current liability means 10 lakhs plus 2 lakhs plus 3 lakh, 15 lakh. Which is nothing but already we got 15 lakhs. From that 15 lakhs only we find out 2 lakhs balancing figure. Able to appreciate? Long-term loan at 10%, 30 lakhs. Are you really with me? This 30 lakhs into 10% only, 3 lakh here outstanding. Yes, sir. Note they have given. And this total comes to 30 lakhs in the ratio of 1 is to 2. 1 rupee capital and 2 rupee reserves. So 10 lakh and that means 75 lakhs is the balance sheet. Total. That's it with regard to question number 11. My dear lovable students, that's it with regard to the chapter ratio analysis. Officially, all the illustration and all the book back comes to an end. I am with you, sir, from your heart. Anybody is there? Where is the grand clap?